All right. Good afternoon, guys. I hope I'm audible, visible.
Yes, sir.
Yes, sir.
Perfect. How's it going, everyone? Hope you all had a chance to go through target costing in this week.
Yes.
Yes.
Because I think very few people reached out to me with any doubts. So I'm not sure if everyone went through and is everyone clear with it, or y'all didn't get a chance to start just yet. Okay. And I hope my screen's visible as well.
Yes.
Yes, sir.
Okay, perfect. So yeah, without wasting a lot of time, let's begin for the day. And normally, of course, before I start off at any weekend, it's better to just quickly revise what we've covered last time. So we can just pick it up from there. Like I said, PM is very interconnected. So it's better to revise what we have discussed. So very, very quickly, do you all remember the format of a cost card? What are the first few elements that we usually have in a cost card?
Direct material, direct
Direct
labor, direct
material, direct
expenses,
labor, direct
and direct
expense.
expenses.
So material, labor, and direct expenses. This give us what? What do we call this?
Prime cost.
Prime cost.
Prime cost. After prime cost, what do we normally deal with?
Production.
Overheads.
Variable production
Variable,
overheads.
variable production.
Overheads. First, we deal with variable overheads, and we deal with fixed overheads later. And accordingly, we call prime cost plus variable overheads becomes our
Variable production overheads cost.
variable production cost. And after adding fixed overheads, we get our
Total production cost.
total production cost. And the two methods that we have discussed, what are the two methods of costing?
Absorption and margin.
Absorption and margin.
So we discussed absorption costing and we discussed marginal costing. Absorption costing values inventory at which of the two?
Total production cost.
Total production cost. And marginal costing values inventory at
Variable production.
Production cost.
variable production cost. So this was a little bit from our MA. We had done a cost statement also, profit statement also, all that's fine. But this was a little bit from our management of revision of management accounts, sorry. And then we'd also gone one step further and covered target costing as a concept. Now, anyone would like to just take a 30-second explanation to the class on what target costing is? Anyone would like to try their hands at teaching? A quick revision of target costing. What is target costing? Yeah, Rahul.
So target costing is they take price from the market, and from market whatever the prevailing selling price is, we deduct our profit, which is fixed 20% or 10%. We get our target cost, and accordingly we check back to our cost how it is, and then we find out the gap between our cost and the target cost.
When does a cost gap exist?
If our cost exceeds the target cost, then there is a cost gap. If it is lower or equals to, then there is no gap.
Perfect. Perfect. Anyone would like to add anything to this? To what Rahul explained? So that was simply target costing in a nutshell. One of the market-based pricing methods where we take market-based prices, work our way back and see if we want the market price, we want our desired profit, what is the cost that we need. We found ways to reduce that cost, and that was target costing in a nutshell. Now, today, guys, in today's lecture specifically, we're going to cover two more accounting techniques, namely activity-based costing, which is simply called ABC. And later in the second half of this lecture, we're going to cover life cycle costing. Now, activity-based costing, guys, very, very simply, if you want to learn, we need to go one step and we need to we need to go one step back and we need to quickly recall what absorption costing stood for. So if I quickly ask you the main reason why we did absorption costing, what was the way we dealt with fixed overheads, guys?
OAR.
We used something called as an overhead absorption rate, where we
Yes.
said that fixed costs are part of my inventory cost. So I want to include them. To be able to include them, I want to convert them into a per unit figure, which we call as overhead absorption rate. And yesterday or last time when we spoke, we discussed that absorption costing may one way to calculate your OAR was that you take your fixed overhead and you divide it by the number of units. Correct? That simple division gives you your per unit OAR, and that works brilliantly well until you have one unit or one product in your company. When you have multiple products in your company, you have to see what are your processes. Some businesses, some products are labor intensive. Some businesses, some products are machine intensive. So in OAR, it can also evolve as fixed overheads divided by labor hours, or it can be fixed overhead divided by machine hours. What does this mean? Simply put, if I'm making multiple products in my organization, let's take the example of Apple. Apple makes iPhones, Apple makes AirPods, Apple makes 6 or 7 main products that they sell in the market. Of course, we all agree most of their processes would also be machine intensive. So we all agree that, they must be taking a lot of machine time. But just one second. Parul, can you just tell me what you're writing? Because I'm not able to pay attention. Parul, it's just, you can leave me a WhatsApp message. Let's take it one to one. All right, sorry. So yeah, as I was saying, Apple has a machine intensive process. So say for example, in every particular machine, one product, say for example, a MacBook takes 4 hours, and say for example, an iPhone takes 2 hours. So using absorption costing, we can simply take the total machine hours, split our cost, and give the cost to whoever deserves it. iPhone gets 2 out of the total proportion, MacBook gets 4 out of the total proportion. That was something that absorption costing did, but it fell short for one single reason. This is very basic a measure of costing. Like I am not able to very simply say that my business is machine intensive or my business is labor intensive. Of course, it's a mix of both. Even in machines, there's multiple things. Even in labor, there are several processes. So it's not easily done as what absorption costing tried to do. So simply put, activity-based costing, and we'll talk about an example now, so you all will get a better idea. Activity-based costing, guys, is a subset of absorption costing. The core idea of activity-based costing remains absolutely the same. What we do, what we find as an overhead absorption rate, everything remains the same. But the only focal point is, rather than using something like labor hours or machine hours, you try and find out what is truly causing a cost to occur. So let's take an example. Say, for example, I have my cake shop. And in a cake shop, we all know currently the trend is that we don't normally buy regular cakes, or mostly on occasions, on birthdays, on anniversaries. We try and buy special customized cakes, fondant cakes, whatever we call it. So, say for example, in my cake shop, I have two very simple products. I have one product which let's call regular cakes, and my second product is customized cakes. Monthly demand, I will say, I sell 1000 regular cakes and I sell 300 customized cakes. Something of that sort is my monthly demand. Now, of course, regardless of the cake, whether it's customized in nature or if it's a regular cake, whatever hour time it takes should be very similar. Say, chalo thoda upar niche. Let's say maybe regular cakes take 1 hour and my customized cakes, let's say, take 1.5 hours. On the other hand, another benefit with regular cakes is that I can maybe make it in batches. So I can make regular cakes in batches of 5. Customized cake, of course, it's customized for a reason. I have to make them in batches of 1. So, and I only, let's keep it very, very simple. I only have one fixed overhead, which is, in my case, I have a designer chef. I have someone who just knows cakes very well in and out, and he's a brilliant designer. He makes amazing cakes. That's the reason why my business is successful. But I have to pay him 1,45,000 in his salary per month. Now, of course, this salary is a fixed overhead in this cake shop scenario, and I need to use some sort of costing method to find a way to get this in a per unit basis. Correct? Everyone clear with the scenario before we go forward?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
Perfect. So let's solve this to revise last week. Let's solve this first of all. If the company were using absorption costing, what would they do? So in my cake shop's process, machine hours, is it safe for me to say that would be the oven time? That's the only machine where my time is being going. So if I were to solve this using absorption costing methods, it would be very, very simple. It would be, let's say, absorption costing. I essentially want a cost for my regular cakes and my customized cakes. So first and foremost, let's find total oven time. So my regular 1,000 cakes all spend 1 hour in the oven. So they take 1,000 hours in my oven. Whereas my customized cakes, 300 cakes, take 1.5 hours in the oven. So they take 450 hours in the oven. So total time is nothing but 1450 oven hours. This is what I would use in my overhead absorption rate. So my OAR, guys, becomes simply my fixed overhead, 1,45,000 divided by 1450 hours, machine hours, oven hours, whatever you want to call it. So my overhead absorption rate becomes 100. Now, can any of you tell me this is 100 per unit or per hour?
Per hour.
Everyone clear? This is OAR per hour because 1450 hours is what we have used. So this simply represents my overhead absorption rate per hour. Of course, different products take different time. So my overhead absorption rate per unit will differ. What will be my overhead absorption rate per unit of regular cakes? My overhead absorption rate per hour is 100. Every regular cake takes 1 hour. So my overhead absorption rate per unit of regular cake sold is 100. Whereas per custom cake sold is 150. This becomes my cost. I have allocated more cost because customized cakes take more time in my machine. If any of us are confused, let's just see if it adds up and if it gives me my total cost. So say I sell 1,000 such cakes and I sell 300 such cakes, which is my monthly demand. So if I've done my calculation correctly, my total cost should add up to, sorry, it'll be a multiply, 1 lakh, another 45,000, sorry, just a moment. And that adds up to 1,45,000. So using machine hours as an allocation method under absorption costing, I found out that my overhead should be 100 rupees per hour. Since my regular cake takes 1 hour, I allocated it 100 rupees. Since my customized cake takes 1.5 hours, I allocated it 150 rupees. Using this, since I know that I sell X number of units, my total cost of 1,45,000 got covered. So this would become part of my cost card in my cakes. Correct? Any confusion so far, guys?
No. There's one confusion.
Mhm.
So that OAR per unit we have find for regular cake it's 100, but we are producing batch of 5. So basically per unit it will be 20 OAR or
No, this is 1,000 cakes. Na? Cake to will go in the oven one by one. Na?
no, in 1 hour are we producing 5 cakes or in 1 hour we are producing 2 cakes?
One.
Oh,
All right. We'll come to batches, don't worry. But yeah, we are producing one cake an hour. So 100 rupees per hour and 150 rupees, sorry, per unit is coming to both our products, right? And you're right. If your example was that this was 5 cakes altogether, then you're right. You would divide this by 5. All right. So that is absorption costing in a nutshell. But I'm sure you all think something doesn't add up. Because if I have a designer chef and he's spending time designing cakes, do all of us net agree that more time goes in designing customized cakes than regular cakes? Do you all agree with that statement?
Yes, sir.
yes, sir.
Yes,
Yeah.
sir.
So absorption costing, which limits you in these two, activity-based costing only differs there. Activity-based costing says, okay, why would you limit yourself to only labor hours or machine hours when in the real business, since business is very complex, for different fixed overheads, you have different costs driving it. Let's introduce ourselves to two terms, cost pools and cost drivers. Cost pools, guys, are nothing but costs of a similar nature, which means if I know that everything, like for example, say I'm a delivery business. So all my cost of operating my truck, which is my truck ka lease, my driver ka cost, maybe my fuel ka cost, all these costs are of a similar nature because they are only incurred when the same activity of driving happens or delivering happens. Correct? So when I pool together all my costs of a similar nature, that becomes a cost pool, and activities that drive that cost pool become my cost driver. So say for example, all delivery related costs are my cost pool, and my cost driver, what is causing this cost to occur, is number of deliveries. The lesser number of deliveries I make, for example, in theory, I will be able to have lesser average cost because I'll be able to utilize my truck, my everything to its fuller capacity. Whereas if I keep making more delivery runs and my trucks are not full, of course, it's going to be more expensive per unit for me, right? So activity-based costing simply does this. It says, okay, why don't you break your fixed overheads into several cost pools? See what is causing those costs to occur, which is your cost drivers, and you continue finding your overhead absorption rate. But then it'll be more specific because you know which activity is taking more time and you're allocating your costs accordingly, right? Let's see this in this scenario. Sales calculation. Zoe, this is not sales. This is just units sold per month, which is nothing but 1,300. All right. Okay. So say for example, I want to solve this same exact question only using absorption based costing methods. What will I do? So a lot of it remains exactly the same, regular and customized things. This time, if one of my cost pools, of course, in a business, there are several overheads. One of them is my designer chef. What do you think is driving his time? The amount of cakes he has to design. Do you all agree?
Yes, sir.
Yes, sir.
So let's try and find that out. So say for example, every time he makes a batch of regular cakes, he has to design how that cake will look. So he has to make 1,000 divided by 5, 200 designs of regular cake in a month, correct? Whereas customized cakes, all 300 of them are made in batches of one, but each and every one he has to design it. So they are made in designs. Total 300 designs in a month are for customized cakes. Rest everything remains the same, guys. Again, my overhead absorption rate, now the total of this, which is 500. So my overhead absorption rate is nothing but 1,45,000 is my cost, divide by 500. So 290. But again, quickly to ask you all, what do you think this is? Is this 290 per hour, per unit, or something else?
Per unit.
Per unit.
Per
It's
unit.
not per unit per se. Think about it. What did we divide it with?
Per cake produced. Per design.
Per design. That's the small difference with ABC. And same thing, again, mathematically, we did the same thing. Here we divided it by total hours, so it became overhead absorption rate per hour. So here, since we design it or divide it by number of designs, the cost becomes per design. Make sense, guys? Take a moment, think over it.
Sir, how come we got 200 regular cakes?
So my monthly demand is 1,000 cakes, regular cakes. I design them in batches of 5. I make 5 cakes, I make them. So the designer has to spend 200 cakes. He has to design 200 cakes, regular cakes, but he'll make them in groups of 5, right? Custom cakes, he makes it one at a time. So it's 300 divided by 1. Make sense?
Yes. Thank you. Yes.
But sir, in regular design case, there's only one design.
No, like regular as in you still sell like say Black Forest or Dutch truffle or something like that, right? But he still has to design them. It is lesser effort than customized cakes, but it's still some effort, right?
Oh, okay.
All right. So that is the simple idea behind ABC. You see where the time is going. My designer chef's time, this one way to say that, okay, for regular cakes, he has to do 200 designs a month. They can be the same designs also. For customized cakes, he has to do 3 designs a month. And even there, it can be similar designs. So time of his goes in designing 500 unique cakes in a month, out of which 200 cake designs go towards regular, 300 cake designs go towards customized cakes. Make sense?
Yes.
Now again, our objective is very, very simple. All we need to do is find out our overhead absorption rate per unit. So all I need to do is allocate this 290 per design across my regular and my custom cakes, and I need to find out my overhead absorption rate. So say for example, for my regular cakes, I am incurring 290 per design. How many such designs am I making in a month?
500.
200.
Regular cakes 200, right?
200.
And custom cakes, how many am I making in a month? 300?
300.
Correct. This becomes my cost allocation. So let me write allocation. And my overhead absorption rate per unit is nothing but 58,000 rupees. It costs me to make how many cakes? How many regular cakes?
200.
1,000 regular cakes.
1,000.
All right. And $87,000 rupees it cost me to make how many custom cakes?
300.
300.
This becomes my cost allocation. Another way, directly, if you wanted to do it, you could have done it like someone said in the previous scenario. It is nothing but 290 divided by 1, which is your batch, and again 290 divided by 5, which is your batch. Either way, whatever adds up to you. I just did this to again be consistent and show you that as long as your total cost is correct, you have covered your total cost, you have done your calculation correctly. So as long as I have correctly allocated 1,45,000 between two products, I have correctly done my answer. But you see, activity-based costing makes things more accurate for me, because absorption costing may, I said my cost of regular cake is 100 rupees, fixed cost, and custom cake is 150 rupees. That's very less of a difference where a lot of effort is going, right? Whereas here, it becomes more clear that custom cakes may 290 rupees worth of effort is going, and regular cakes may 58 rupees worth of effort is going. This gives me more accurate cost cards. And as we have already learned, more accurate cost cards only mean better and more accurate prices. Correct? So we'll discuss how it's beneficial. But conceptually, am I making sense, guys?
Yes, sir.
Yes, sir.
I sense some confusion amongst these values. Anyone confused how we got 200 or why we didn't use this somewhere or something like that? Please feel free to ask. Yes, well.
So can't we simply do 145 into 200 divided by 500? So we'll get 58,000. Actually, I didn't understand the calculation of OAR per unit, that is 58 and 290.
So it costs me 290 rupees per design, right?
Yes, sir.
So in this 290 per custom design, how many designs am I making?
One design.
One. So that full 290 goes to that one design.
Yeah.
Whereas each time I design a batch of regular cakes, how many cakes get designed?
5.
So that cost of 290 gets split between 5 cakes.
Okay, sir.
Make sense?
Yeah. And then
Another way, so if you want to do it, you can do it by simply saying, okay, 290 per designer, 200 such designs are being made. So 58,000 rupees it cost me for regular cakes.
Okay, sir. Getting.
Make sense?
Yeah. Thank you.
Perfect. So the idea is really simple. If I'm summarizing it one last time, if I am paying your designer 1,45,000, for me, at least business sense may, I know he's spending more time towards custom cakes. So if I were to allocate a ratio of his time, it surely wouldn't be that as more of his time is going in designing regular cakes and less of his time is going in custom cakes. But that's what absorption costing told me. Whereas when I did it for activity-based costing, it told me that less of his time is going in designing regular cakes, 58,000, and more of his time is going in making custom cakes. Now that when I see, I agree with it from a business perspective also. Okay, what is actually is happening in my business is also displayed in my accounts, which means my accounts are more and more accurate. Getting more accurate costs per unit is where activity-based costing comes into play. Make sense, guys?
Sir,
Mhm.
I'm clear with this ABC, but in that absorption costing, I have one doubt.
Sure, go on.
That OAR per unit is what I'm getting confused.
So the number didn't change because there's 1 and 1.5. So take it this way, okay? OAR is 100 rupees per hour. With me so far?
Yes, sir.
Okay. Now, regular cakes take how many hours in the oven?
1 hour.
So that's 100 into 1.
1. Okay.
Whereas custom cakes take 1.5 hours. So if it's 100 rupees per hour and they take 1.5 hours, then the cost per unit becomes 1.5.
Okay. Okay. Now clear, sir.
Perfect. All right. So also let's. Mhm.
So I did a calculation. Please tell me this right or wrong. So if regular cake take 1 hour and customized cake take 1.5 hours, so I divided 145K with 2.5, and answer is same. I'm getting the answer same.
Correct. Correct. You have done it in a ratio of 1:1.5,
Yes,
which
sir.
is what
Yes, sir.
done here. Yeah. All right. Perfect. So that's activity-based costing in a very simple sense. We need to do more practice to get this. But let's, if anyone is visually unable to piece it together, this is a very good chart to explain it. So if you'll pay attention here, Under absorption costing, you take your manufacturing overhead as one big total of costs. All my fixed costs add up to my manufacturing overhead. And then we use something like number of units, labor hours, or machine hours. Basically, we use one driver or one allocation base, and we split that cost between multiple products. Whereas activity-based costing says, okay, the same cost needs to go to the same products, but to be more accurate, to be more fair in doing that, we split the costs into similar cost pools. For those cost pools, we find what is causing those costs to incur. And using them, we come up with many OARs. Like we found in our example, OAR per design. Similarly, you'll get OAR per batch, OAR per delivery, OAR per test. And you would do this activity multiple times to arrive at an accurate cost for your products. Let me explain these terms in a production environment. So commonly when we talk about a factory, one second. Commonly when we talk about a factory think about iPhone again being produced. Now, whenever in a factory, before production starts for the day, the company needs to decide what they want to produce. And what may, of course, I'm still going to make my phone, but there are smaller differences. Maybe I want to make the red color variant today. Maybe I want to make maybe if you take a packet of chips, maybe I want to make a larger or a bigger packet or something. Maybe I want to put a different flavor, magic masala, cream and onion. So whatever that decision is part of the setup. Because accordingly, I have to set up my molds in my factory. I have to set up my packaging material in the factory so that, of course, when my product goes through, it becomes the output that we know and see. So that setup again keeps changing depending the number of batches. Because I make one batch of red iPhones, one batch of pink iPhones. So I have to set up the molds and everything accordingly. So setup related costs get divided by number of batches. Then once the setup is done, production happens. Production can be machine oriented or labor oriented. So that still gets divided by direct labor hours or direct machine hours. After my production is done, every time there's a new batch produced, I need to do a testing on it. Is this batch made correctly or there is something defective? Food ke case mein defective can be a wrong mix. Sometimes their products become like say chips. They add too much masala or too less masala and they have to discard the batch. Sometimes in a phone, some part has not been assembled correctly. So maybe they have to do rework. So to understand all this, they need to do testing. Again, the number of tests that I do incur my testing related costs. So when we do exam questions, it's going to be these kind of terms that are going to be commonly used. Okay, the company had inspection, setups, tests, other overheads, and these are commonly going to be the cost drivers. In reality, the job of a management accountant like us is to find those cost drivers. But of course, from an exam perspective, they're going to give you the costs, they're going to give you the cost drivers. All you need to do is correctly apply them and find out the answer. Making sense, everyone?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
Perfect. So before we practice a little bit more, Umam, do you mind reading the difference between traditional and activity-based costs?
Yes, sir. No. So first, traditional costs are not allocated to cost pool, as this method assumes that products consume all activities in proportion to their production volumes. Now, ABC, all costs are fixed allocated to cost pools which represent a particular activity. Now, second point, in traditional, overheads are absorbed on the basis of units, labor hours, and machine hours. In ABC, overheads are absorbed on basis of cost drivers. Now, traditional third point, same overheads absorption rate is used to absorb all overheads. In ABC, absorption rate for different activities is different. Now, traditional fourth point, traditional ways of costing are easy and simple to explain. Now, ABC is difficult to implement and to explain.
Perfect. So mainly the last point I think we need to cover. First 3 points is primarily what we discussed. Okay, absorption costing is one directional. ABC is more branches, more accuracy, more specifics. Correct. That's primarily the idea covered in the first 3 points. Only the fourth point, like I just briefly said, of course, it's difficult to explain. Even we'll take a little bit time to absorb ABC as an ideology because it's a very vivid idea. It's not that every company, every product may the same cost driver will apply. In different businesses, different cost drivers apply. That's why it tends to be difficult to explain. And imagine as accountants, of course, we will understand it. But not all businessmen are competent accountants. They are businessmen, they are more on a different branch. So, as an accountant, when you come in and you say that, okay, the company should adopt ABC, naturally they think okay, why and what, and it's not easy for them to understand. Correct? When they do understand and they want to adopt the methodology, like I said, implementation is difficult. Implementation is difficult for multitude of reasons. And again, I think that's covered in advantage. Yeah. Okay, let's discuss that. All right. Umang, can you read the disadvantages first of ABC? Only disadvantages.
Yes, sir. First point, complex and costly to implement as the information system that is necessary for running the ABC model is expensive. Thus, the cost may not justify the benefits obtained.
Right, one by one. So the
Ravi?
first disadvantage simply talks about information systems. Imagine not having an IT system which tracks how many deliveries you made. Would you be able to do a cost per delivery if you didn't know how many deliveries you made? Of course not. Similarly, if my IT system is not able to track each and every driver that I want for ABC, I cannot do anything. So it's expensive, it's complex to set up my IT systems that would enable me to do my activity based costs, right? Yeah, Umang.
Second point, difficult to explain the method to stakeholders as they may lack technical knowledge.
Right, we discussed that.
Third point, problems in identifying appropriate cost drivers and cost pools. This can happen when there is more than one cost driver.
Right. So what does this mean? For cost pools, there can be many cost drivers. It's not as black and white as we will learn or we will solve questions from an exam perspective. In reality, there can be several cost drivers. I can take my delivery costs and I can divide them by drivers in terms of locations of delivery. I can divide them in terms of number of deliveries. I can divide them in terms of product types delivered. So in reality, cost drivers can be plenty. So which is the correct one to use? It's again a judgment call which differs, and hence again it can be a complicated method to use, right?
Now, the fourth point, limited benefits if the cost is primarily volume driven and thus traditional method would be more appropriate.
Perfect. So this is very important. Expect this to also show up in some theory question. What does this simply mean? If absorption costing is doing a good enough job, is it necessary to even go about and apply ABC? No. And when is absorption costing doing a good job? If my products are actually labor oriented, machine oriented, or simply number of units are okay enough. Like say, for example, I'm making handcrafted bags. Of course, each bag takes some number of hours for a particular weaver to make. So there, if I divide my cost in the number of hours spent on a bag, I will get a fairly accurate cost per bag. So there, a normal system is completely fine. I don't need to go and make it complex for no rhyme or reason, right?
Now, fifth point, it may be impossible to allocate all overheads activities to cost drivers.
Perfect. So say, for example, canteen. Every factory has a canteen. Canteen, of course, people eat. There are ways you can definitely do it where you go a little bit deeper and see number of employees per product, and but then employees are working in multiple products and then it becomes a full khichdi. So the idea is not every cost can have a perfect cost driver. It may be impossible to find certain cost drivers that correctly represent why an activity or why a cost pool is there in the first place. Correct? So there the company has to then just use something very basic, and then again it tends to be inaccurate. So ABC, to summarize, is not the most simplest methods to implement in reality, but if done well, it tends to be more accurate. Any doubts here? Anything you all want me to elaborate on? All right. I hope everyone's with me so far.
Yes, sir.
Yeah.
Yes, sir.
All right. Okay. Umang, last thing, if you can just read the advantages.
Yes, sir. The advantages for to do it costing. More accurate prediction of products cost. This may further help in better decision making, and hence any organization can stop producing loss-making products.
Right.
Now, second point, better understanding of what drivers cause due to identification of cost drivers. Thus, one can help to plan to reduce the total cost by reducing the use of that particular driver. Third point,
Mm-hmm.
it becomes easier to control overhead cost. ABC can be applied to all overhead costs and not just production overheads. Easier to apply in service costing when compared to traditional costing methods.
Perfect. So again, most of it talks about being better able to control overheads. Like deliveries ka example we spoke. Delivery is not a production overhead. Delivery is a distribution cost, a non-production cost. Correct? It can apply there. When we talk about service costing, services are more fixed overheads in nature. They are not very direct cost oriented in nature. And there, when there are fixed overheads, of course, ABC comes into the picture and helps you make more accurate costing decisions. Correct? The more accurate your costs are, the more accurate your pricing will be, the more accurate your overall decision making will be, so on and so forth. And the most obvious reason is the second point, where once I have an idea, once the manager has an understanding of what is causing a cost to incur in the first place, they can work it out. They can try and tweak and find ways. Okay, if this is causing my cost to occur, if I can control this activity, if this activity happens less, maybe the cost will also happen less. At the end of the day, yes, I agree that they are fixed costs. But if I get them lower enough, maybe I can eliminate fixed costs. What do I mean? Say, for example, I have 3 trucks and the number of deliveries in a month are 300. If I can get my number of deliveries down to 200, maybe then I can get my work done in 2 trucks and I can sell my third truck away. So the moment I have control over what is driving my costs, I can start reducing the cost drivers and over time reduce my overheads as well. So that's why ABC is generally the most superior form of costing. Make sense, guys?
Yes, sir.
Okay, so that's primarily the chapter. Let's practice 2-3 questions.
So I have a doubt.
Mhm.
So please do the example where we have solved the case example.
Sure. Yeah.
So here, how will we identify that the cost driver is our designs, or we can say that our own our factory is also a cost driver. We can say that also.
No, so oven will be a cost driver to some other overhead. Maybe the machine ka electricity cost. Electricity of overhead you can say is oven time. Correct? Because the oven is consuming electricity.
If
Designer
electricity
chef.
if electricity cost is given, तो जो हमने आंसर सॉल्व किया है for marginal absorption costing, that will be for ABC costing answer.
Yes. So that's what I'm saying. Okay, here, it's not that we will never use labor hours. If you see in the chart, for something that is to do with production, labor hours is still allowed. Okay. So it's not that we are discarding labor hours. It's just that we are not using labor hours when it is not required, which is say these. So if I add one more overhead, say for example, electricity bill, and that is 10,000. So for this overhead, you will do the same activity just with oven time because your ovens are using your electricity is a fair way to put it. So that's the idea. You split your costs first of all in several groups. For each group, you see what is driving that group and you use that as a basis. Make sense?
Yes.
And we do a full length question now, don't worry. Sorry, that. Actually, we don't need that. One second. All right. So Here are the 6 steps if you want to refer to them as well once. Step 1 is to always identify the cost pool, which is nothing but the group of cost. So in our case, it was the designer chef's salary. Then you calculate the cost of that activity, which is nothing but in our case, 1,45,000. Then you identify what is driving that cost. Designer's cost is number of designs he makes. That's my cost driver. For that driver, I find out my overhead absorption rate. I absorb it using that activity overhead absorption rate. And finally, I calculate my cost per unit. So it's a similar order of 6 steps. Usually in an exam scenario, first 3 are given and done, because these are something you fetch out of a system. Like you are not expected to magically know what is a cost driver for some cost, correct? So in an exam question, that's something that will always be given to you. All right. So let's practice a few questions, guys. All right. So first, let's just do question 2 of your quiz. Right. Okay. So reading this for everyone. Sydney company makes 2 products, A and B. They make 1,000 and 4,000 units of each. Labor hours are 8 and 10 respectively per unit. Production runs are 13 and 15. Number of inspections are 5 and 3. And then they've split their total fixed cost into 3 categories. One is setup, the other is inspection, and the third is all other overhead costs. They are saying that for other overhead costs, my labor hours are my cost driver. Using activity-based costing, what is the budgeted overhead cost per unit for product B? So B though we'll answer only. In an exam, I would only solve for B. But right now, since we are learning, let's solve for both A and B. All right. So you can always make a simple, consistent chart you can make simply. So first and foremost, what's my very first cost?
Setup cost.
Production setup cost.
Yes.
What do you think drives this cost?
Production runs.
Production run.
Production runs. So my production runs are my cost driver. So all I need to do is see the ratio. So 13 production runs are happening for product A, 15 production runs are happening for product B. So it's simply 13 is to 15. I need to simply take my 1,40,000 and split them between A and B in that particular ratio. So my 1,40,000 goes to my 2 products as 13 divided by 28, simple ratio analysis, ratio allocation, and 15 divided by 28. Correct? 13 is to 15 is my ratio, total is 28. So 13 by 28 goes to A, 15 by 28 goes to B. Correct? These two need to add up to 1,40,000. Only then I know I have done it correctly. Right?
Yes, sir.
Keep doing this activity. You don't need a per unit every single time. And the total may we'll do a per unit. Okay. So next, inspection cost.
Number of
Inspections.
Number of
So 5 and 3 inspections happen. So 5 is to 3K ratio. I will split it. My total cost was 80,000. So that becomes 80,000 into 5 by 8 and 80,000 into 3 by 8. Finally, other costs. Now others, they have only told me labor hours is my cost driver. So now I want you to tell me how many labor hours for product A?
8.
8,000.
8 is per unit. So should it be 8 or 8,000, which is 8 multiplied by 1,000?
8,000.
Correct. And for B, how many total hours?
40,000.
40,000.
40,000.
So 8,000 is to 48,000. If you all want, you all can write it 8 is to 48, same thing. 4 is to 24, 2 is to 12. All are the same thing. Correct? And my total cost is 96,000. Again, one more ratio.
Sir, it should be, I guess, 8 is to
8,
40.
8 is to 40.
8 is to 40.
Perfect, my bad. So then all I need to do is allocate this 96,000 into 8 by 48 and 96,000 into 40 by 48. So my total cost for A is 1,31,000.
be 40.
Sorry. All clear?
Yes, sir.
Right. So this simply becomes my total cost allocation, but now I've allocated them under absorption costing. What I would have done, I would have taken all my costs and allocate them using 8 is to 40. But here I simply did it more accurately by splitting it into several cost pools, right? And now I need OAR per unit, for which I need, if I have a total cost and I want a per unit cost, what do I need here?
Divide by number.
Number of units.
Number of units. So how many units of A?
1,000.
1,000.
1000.
How many units of B?
4000.
1,000.
So divide your cost and you have your answer. So my cost per unit of B is 46.25. Cost per unit of A is 131. That is more accurate and only possible because of activity based costing. Whereas if you solve the sum using absorption costing and it's in front of you, 8 is to 40 ka ratio hai, which means 40, which is practically what 90% of the cost would have been allocated to B, and B ka cost would be very high. Whereas when you see that more of the costs are incurred because of production and inspections, which are more or at least at a decent equal ratio happening for both products. So that allowed you to give more of the cost to A as well. But if you do this and you see it using absorption costing, all the cost would be put on B. A will look very cheap, which is actually not the case. All right. So your answer for B becomes 46.25. Take a moment, guys. Please glance through this.
In absorption costing, we will take 8 is to 40 or 1 is to 4.
In absorption costing, you will take 8 is to 10. So again, 8 is to 40.
So
In fact, it will not take a lot of time. Let's just do it using absorption also. So my absorption total cost is 3,16,000. I will simply allocate them using, say if I had total overheads and I have labor hours, which will still be 8 is to 40. So 316,000 into 8 divided by 48 and into 40 divided by 48. And then I would divide this by number of units and OR, so that part remains the same. And you see how my cost changes. Suddenly A looks very, very cheap and B looks a little bit more expensive. But that's not accurate if you look at the activities. Yes, someone else had a question?
Yes, sir. Sir, how do you get a 8 raised to 40? Yes,
So
8
that's
raised to
nothing
40.
but total labor hours for product A are 8,000, correct?
Okay,
Total labor hours for product B are 40,000.
okay.
So it's basically 8,000 is to 40,000 simplified.
Okay, sir. I got it.
Perfect. Any other questions? That's activity based costing in a nutshell.
Sir, I had a doubt. as
Mhm.
we did for labor hours, we multiplied budgeted units into labor hours. This
Mhm.
we didn't did for production runs or number of inspections. So why only for this labor hours we did so?
Because labor hours, if you see the question is given per unit. A production run is every time you do it's like a batch, correct? So basically it's saying in 13 batches, it made 1000 units. In 5 inspections, it was able to inspect all 1000 units. Got it?
Okay, they are not mentioning it is as per unit or per batch. If they would have, then we have to do the required adjustments.
Correct. And they will. So when we do LMS questions, you will see those also where they'll give you production runs per batch. So you'll have to find out this 13:15 yourself. So we'll come to those as well.
Okay, okay. Thank you, sir.
Yep. Perfect. All right. Ready for one more question, guys?
Yes, sir.
Yes, sir.
Okay. So this is a full length question. This is what we have in the books. Let's take the data and then let's discuss it. Okay. So let me copy this. All right. So in this requirement, the very first thing that they are asking us is calculate the total cost of each product if all overhead costs are absorbed using a machine hour basis. So basically absorption costing method, but machine hour basis. Then it asks us to calculate it using activity based costing. So let's do it one by one and then let's discuss the third requirement.
So page number, please.
This is on page number 26. Illustration 2. All right. Okay. So XYZ Limited manufactures 4 products, A, B, C, and D. In the details, they've given us output in units, cost per unit details, where they've given us direct material, direct labor, and they've given us machine hours per unit. Then they've given us a lot of activity-based details, which we don't need right now. Right now, if you're solving it using absorption costing, all we need is total cost and we need our machine hours. So let me prepare our table first of all. We have 4 products, products A, B, C, and D, and we have our total cost, right? Our driver is going to be machine hours. Okay. And our ratio, we'll come to it. All right. Can someone tell me what the total fixed overhead is coming to? No, 63 is the machine operation and maintenance cost.
1,10,592.
1,10,592.
110,592. So that's simply my total fixed overhead. And I need my total machine hours. Again, machine hours has been given in per unit terms. So my ratio needs to be a multiple. So it'll be a this thing looking ratio. Let's do it. So 720 units take 4 hours. 600 units take 3 hours. 480 units take 2 hours. And 504 units take 1 hour. So total machine hours are coming to 614. So this becomes my ratio. I need to allocate my total cost of 110,592 across my 4 products. So actually, let me just write it like this. Ratio products A, B, C, D, and my cost. So my total cost was 1110,592. All I need to do now is allocate my costs. So 2880 divided by 6144 multiplied by 110592 and so on and so forth. Again, please be in a habit of checking your costs at the end of the day. So once your 4 costs have been allocated, do a separate total. If it's correctly adding up to the same overall fixed cost, then you have done it correctly. Otherwise, it can be simple calculation errors, right? And now I simply need to do this. This is my total cost for the full production of A, B, C, and D. So my OAR per unit simply comes to, I need to divide it by my number of units as we've done it before. So number of units are 720, 600, 480, and 504. So my overhead absorption rate per unit comes to these numbers. This is using machine hours in a absorption costing method. All right, total machine hours, so we are clear. All right, so this is done using absorption costing. It's always simpler, it's always straightforward. Activity-based costing is where the problem becomes complex. So let's jump into activity-based costing.
Sir, how did you calculate that OIR per unit again?
So number of units we have from the question.
Yes, sir.
We found product-wise cost. So OIR per unit is the division.
Okay.
Yeah.
And sir, how did we get the cost column, the total cost?
Total cost was nothing but ratio. So the 110,592 has been split 4 ways. 2880 divided by 6144 goes to this, and so on and so on.
Yeah.
Yeah. So what we wrote here are the ratio. Since it was 4 products, I wanted to keep it clean, so I wrote it in rows.
Okay.
All right. So let's read the question. Let's do this activity now for activity-based costing. So reading the question first. The 4 products are similar and are usually produced in production runs of 24. Matlab, I make them in groups of 24. Okay. And sold in batches of 12. The company uses machine hours currently. Okay. They've given us 5 costs: machine operation and maintenance, setup cost, store receiving cost, inspection cost, and material handling and dispatch cost. During the period, the following cost drivers are used to be the overhead costs. So setup के लिए we want to use number of production runs. Store receiving के लिए we want to use the requisitions raised. Inspection के लिए we want to use number of production runs again. And material handling and dispatch के लिए we want to use orders executed. So they've given us what the cost pools are, cost drivers are. They've also said machine operation and maintenance should be apportioned between setup cost, store cost, and receiving and inspection. Inspection in the ratio of 4:3:2. And they've given us details about number of requisitions raised is 50 for each product. Number of orders executed is 192. So a lot of details, I agree. Let's go at it one by one. You remember in our disadvantages, we discussed that some overheads may not have a cost driver. So when that happens, you have to apportion it between other overheads only. Here, machine operation and maintenance cost, as they are telling us, they are saying it does not have a cost driver. You can also use machine hours to do it, but they don't want to do it. They are saying it, okay, you just split that cost amongst other costs. So there's an extra working of sorts that we need to do, where basically we are saying we have 4 cost pools. We have setup, store receiving, we have inspection, and we have material handling. Their costs are given to us in the question as, let me say, current cost as 20,000, 15,000, 10,000, and 2,592. Now they are saying in this line, if you pay attention, they are saying that this 63,000 ko split it in the ratio of 4:3:2 and add it in these 3 boxes. Setup gets 4, store receiving gets 3, inspection gets 2. So let's add it. 4:3:2 के ratio में I want to split my cost of 63,000. So same thing, but this is an added step that we are doing, guys. Please pay attention. And actually, I'll write this here. So 4/9 of the cost gets allocated to setups. 3/9 goes to store receiving, and 2/9 goes to inspection. So my total cost.
Excuse me, sir. Can you explain the ratio?
Sure. So ratios is given in the question. It's given as 4:3:2, right? And it's always ratios always quoted in respective terms. So setup being 4, store receiving being 3, inspection being 2. So we've taken that.
Okay, got it.
All right. So now our total costs become the totals, which again adds up to, should add up to 110,592 if we've done it correct. This was an added step, guys. It may not show up in every question. It was basically, this is an example, that's why it's covered, that if a cost does not have a cost driver, what can you do? This is what you can do. You can just split that cost amongst other cost pools. Okay?
Okay, sir.
All right, now that we have our total costs, all we need to do is prepare the same exact table like we are in here, and we will have our answer. The only challenge here is going to be to find out the cost drivers. So let's do it with patience. First and foremost, I have how many cost pools will come here now?
4.
Not 5, right? So I'll be a little bit lazy and I'll write it. All right, we'll find out our cost drivers. We will have 4 products. And we will have our total cost, right? Okay. So first and foremost, my setup ka cost, which is 48,000. What is the question telling me? Setups need to be, the cost drivers are number of production runs. Have they given me the number of production runs in the question?
So 24.
24 is, if you read clearly, production runs of 24. What does that?
So, but at a time, 24 products are being produced.
Perfect. At any given point, I put a batch of 24. Production runs of 24. So if you simply want number of production runs, take the total output and divide it by 24. So let me show it as a working. So production runs is nothing but for all 4 products. Say product A, 720 units, divide by 24. So if I want to make 720 units in groups of 24, I will have to make it with 30 production batches. You can call this batches. So all I'll have to do it the same way. 600 divided by 24, 480 divided by 24, and
Correct.
504 divided by 20. Clear how we came to the ratio? 30 is to 25 is to 20 is to 21. The total, let's also write 96. So you have it in front of you. Tougher part is done. All you need to do is 48,000 ko split across the 4 products in this ratio. All right. Yes, well.
Sir, could you please explain this again?
One second, my Excel. Yeah. Which part? This part?
Yes.
So they are saying in
20.
question, can we make it in groups of 24? So if 720 units were made in groups of 24, how many such groups or how many such batches did we require? 720 divided by 24 gives me 30 such groups.
Okay, got it.
Right. So number of production runs for A are 30, number of production runs for B are 25, so on and so forth. Total production runs in my company are 96, which we need to take this 48,000 and split it across. So 48,000 multiplied by 30 by 96. And I'll only do the first one this time, guys. So 25 by 96. 20 by 96. And 21 by 96. Again, you can always check. 48 has been covered. All right. So let's take a pause for a second. You'll try store receiving number of requisitions raised. Again, you all can see. Okay, that one's actually simple. Where is okay? So let's do this one. Number of requisitions raised on each store is 50 for each product. 50 for each product means what? Can someone tell me what a requisition is?
Is a form for purchase.
For ordering.
Purchase requisition.
Correct. Requisition matlab purchase. So I have made 50 purchase requests per product. So my cost driver is requisitions raised. What is the ratio for all 4?
1:1:1:1:1.
Perfect. If you write it, it is 50 is to 50 is to 50 is to 50, or simply put, 1:1:1:1. Equal between 4. So why not simply keep it equal? So this one's very simple. 36,000. Yeah.
I have a doubt. Why did we take 1:1? Because number of units produced is different for each of the product.
Correct. But they are saying here the number of requisitions raised is 50 for each product, full product. Correct? Not unit, product. So I made 50 requests for A, 50 for B, 50 for C, 50 for D. So it is 50 is to 50 is to 50 is to 50. Make
Means
sense?
to produce the whole of the product A.
Yes. Yes.
Okay.
So the terms we'll have to read very carefully. If it's each unit, each product like you see here, or its production runs off. So these terminologies will make a difference. Okay. So this 9,000. Any confusion?
Not yet, sir.
No, sir.
So inspection is also number of production runs. Well, technically it's in the same cost pool. Technically, I should just add these two together. but it's okay, not a real question, so we can do it. So inspection again, same exact ratio, 30 is to 25 is to 20 is to 21. My cost is 24,000. So same exact thing. And I'll just be a little bit lazy. अच्छा नहीं हुआ. Oh, I done it manually. Never mind. So 24,000 into 30 by 96 into 25 by 96 into 20 by 96 and into 21 by 96. Okay. Harshita, let's just get there.
Sir, how that store receive is ratio is 1:1:1?
Sorry, come again.
That store receiving, how that ratio came? 4:1.
So what do you think? What's your guess what the ratio should be?
I didn't get that.
So here they say the cost driver is requisitions raised. In information, they've said the number of requisitions raised on store is 50 for each product. So it's 50 is to 50 is to 50 is to 50. Or simply put, 1 is to 1 is to 1 is to 1. Okay.
Got it, sir.
Perfect. Okay, last one. Material handling and dispatch is orders executed. So how many more orders I execute, those many times I have to handle my materials and dispatch them. Correct? So now the sales wala part comes. Now we are saying sold in batches of 12. It's told here also, it's told here also, it's told twice. Doesn't matter, logic remains the same. So sold in batches of 12. Just like we did production runs of 24, you will do the activity and give me the answers. So try and find out the cost driver using batches of 12. Try and allocate the cost, and then I will do it and you all can confirm it. Jiren, what number have you sent me?
Sir, 2304.
Yeah, but what? I don't understand. What does that represent? Among the ratios, correct. So using sales, basically, you'll need to find this ratio. And using that ratio, you'll need to allocate the 2592 ka cost. Harshita, that's correct. So try it. Of course, we'll discuss it as well. Arya, Dipanshu, that's correct. Same exact thing, guys. Take your products. This time, take it in batches of 12. So how many times did you have to do material handling and dispatch? Once you get that, that becomes your cost driver. And using that cost driver, you all can allocate your costs. Mansi, Riddhi, Khushbu, that's correct. Nakshatra, that's correct. Take a moment. We don't have any rush. Swanvi, that's correct. Sanjana sounds correct. Granth, that's correct. So I think you have an idea. Just to do it for everyone. Sales runs, I can call it 720 divided by 12. So this will nothing be but a double of my production runs, simply. 600 divided by 12. 480 divided by 12 and 504 divided by. So my new ratio is 60 is to 50 is to 40 is to 42, and the total is 192. Now that I know, and again it could have been a tally if I wasn't sure, because this 192 has been given to me in the question. You can read number of orders executed is 192. So they had given us that hint so that if any case we got it wrong, we could have also always totaled it. Correct? So this Chindi sa 2592 ke cost ke liye, we have to do this effort, but accuracy comes at that cost. So it's worth it. And we will now tackle it. So 60 divided by 192, 50 divided by 192, 40 divided by 192, and 42 divided by 192. Those are your costs. Yep. Tisha, Meera, Arya, all correct. Any confusion, anyone? थोड़ा ज्यादा ही we've become silent. Anyone all clear?
Yes, sir.
Yes, sir.
Yes, sir.
Yeah. So let's complete the question. Only a step left. Let's first and foremost total my costs. So total cost of 4 products is there. Hopefully it adds up to 110, 592, which it does. Number of units 720, 600, 480, 504, and OAR per unit. So divided, and that's for all of them. Make it as well. All right. Any questions, guys, before we discuss part 3?
Sir, could you please show the material handling calculation?
Sure. So this one or the allocation?
Sales run.
All right. Sales is nothing but the products divided by 12. Every time I make a sale, I make it in a group of 12. So I have to sell it 60 times to make sales of 720 units. All right. So finally, the third requirement, and this is again mainly for discussion perspective, asks us to comment on the differences between absorption costing and activity-based costing. So of course, overheads are not our total cost. Our total cost also includes material and labor. So material and labor is essentially our prime cost. So prime cost being 42 plus 10, 52, 45 plus 9, 54, 40 plus 7, 47, and 48 plus 8, 56. So cost using ABC, cost using absorption. Cost using ABC is nothing but 52 plus 44.875 for all 4 products. And using absorption costing is the old one. 72. Basically, I'm just doing direct materials plus direct labor plus overheads, but for 2 different methods.
Sir, is the prime cost given in the question?
Not directly. We just did material plus labor.
Oh, okay.
Okay. So what do you all observe, guys? ABC did make it better in any way, or what's the thing?
Sir,
So, yeah,
absorption costing has just inflated the A and B costs, but I guess the ABC costing is proportionately allocating it to all of the four products.
Correct? Agreed. So what absorption costing did was it took away some cost from C and D and dumped it more on A and B. Correct?
yeah.
And of course, it might sound like a very small deal, but again, try and connect it to something like, say, for example, you learned target costing. Say, for example, this was nothing but your what's a product that sells like 150 rupees. Uh, let's say this is a market product that sells at 150 rupees, correct? But because of our incorrect calculation, using absorption costing plus 30% markup, I would have priced mine at 160, correct? So my selling price versus market price being 150. Of course, I can sense what would happen in the market. People would buy the other product and my product would fail. But when I do ABC, is when I realize, okay, oh, my actual cost is 96. So my market price can very easily be under 150. Correct? This is basically just a eye opener. You'll of course correct all four prices. Correct? You will also realize that maybe you were underselling product D. It was priced less than optimal. Correct? So somewhere or the other, prices will get adjusted, but they will reflect a better nature of your costs. Because sometimes what happens is you charge an incorrect price and you're failing in the market also, and you're not recovering your cost also, and it's all very messy. But when you have more accurate prices, you can set more accurate pricing decisions. And just doing this activity sometimes is also an answer to reducing your cost gap, as we had discussed in target costing. Correct? So these kind of things are possible when ABC is done. So this is a long full form illustration too. MCQ perspective, you will get something more similar to the question 2 that we had done. Itna in depth because this is not a section C topic. Let me remind you of that. It's a MCQ topic. MCQ mein there will not be so many steps. An average MCQ can be solved in 2 to 3 minutes, guys. So they will only have one or two overheads that they would want you to deal with. Now that we jump into the LMS, you all will see. But this is ABC in a nutshell. Just one last thing from my end to clarify. Activity based costing is more of a principle, more of an idea, a basis with which you do things. Uske upar, there is activity based budgeting, which is a budgeting method, which we briefly saw in the questions that we did, but it's more so discussed in the budgeting chapter that we're going to learn later. And activity based management is something that it's again basically nothing but management decisions using ABC. Something that you will learn at an APM level should you choose that, but that's basically the extension. So what we are learning is how the method works. The application of that method is this full scale question that you did that essentially falls under activity based budgeting, which is what we're going to also cover in later discussions. ABM is something that we'll cover in APM level. All right. Just something that you'll need to know for clarity on what you're learning. Any questions for me, guys, before we proceed? All right. So just, yeah, you can see the benefits of activity-based costing. It leads to better management overall because you're able to control more things. More control is more management. You get a clear idea of accountability and responsibility because you know under whom's or whose responsibility a particular cost pool falls. So even they have the accountability and they're simply able to manage it better. And your resource allocation improves. When we talk about resource allocation, it's everything like pricing, marketing budget, production space, because again, you have a true idea of what's causing what costs to incur. So ABC simply allows you to handle all your production much more accurately. Accurate is the final word that ABC will always be associated with. All right. Shall we practice some questions on the LMS then, guys?
Yes, sir. Yes, sir.
Yes, sir.
Hey. Just a moment. All right. So let's discuss a few questions, both theory and we'll do one or two practical ones. So, which of the following statements about activity-based costing is true? A cost driver is an activity-based cost. True or false? Any ideas?
False.
Why false?
I guess it's true.
Why true?
True, sir. True. So because
Okay.
you are looking at the activities that were being performed for producing the units, and based on that, the drivers were being used to allocate the costs.
Can you all give me an example of a cost driver from our discussions?
So like the inspection costs,
Machine setup.
Setup cost, production.
So say for example, number of deliveries, number of setups. Is that's the cost driver? Is that leading me to my cost or is that my cost itself?
leading to my
It's leading towards the
Leading to one
Leading
cost.
to your cost. Correct. So that is not your cost itself. Like it's not a cost, it's a cost driver. Okay.
Option B, material handling and dispatch cost is likely to be the number of orders handled.
Right. Let's come to that. So cost driver for material handling and dispatch is likely to be the number of orders handled. Is that true or false?
true.
True.
Seems true. The more orders I handle, the more I incur material costs. So let's hold it for now. Cost driver for quality inspection is likely to be batch size.
False.
False.
Would be a good cost driver?
No.
Depends upon the materials we use.
The cost
past
driver would be
experience.
number of
No.
inspection.
The number of inspections conducted.
Number of inspections, number of batches, because every batch needs to be inspected once. So maybe that can be the same, or number of inspections directly. That would be a better cost driver. Okay, so this is false. Because batch size 500 ka ho ya 50 ka ho, I'll still have to do an inspection. So size doesn't matter. Lastly, in the short run, all overhead costs for an activity vary with the amount of cost driver of that activity. True or false?
False, because fixed overheads remain fixed in short run.
Correct. They are overheads for a reason, right? So in the short run, if they were variable, then they would be direct costs, variable production overheads. Correct? It would not be something that would vary. So our answer seems correct. All right. Okay. which two of the following are true? So, in a system of ABC, for costs that vary with production levels, the most suitable cost driver is likely to be direct laborers or machiners.
False.
Why false?
Because it can be suitable for absorption costing.
But what is ABC?
Activity based costing. Activity based costing.
Okay, okay. Let's come back to it. Line B, activity based costing is a form of absorption costing.
True.
That it's true.
True. Substitute.
All right. Again, I had said it in the start of the, in case there's any confusion. Remember, absorption costing is like the big umbrella term. ABC is a part of it. So it's a part of absorption costing. Okay. Activity based costs are the same as relevant costs for the purpose of decision making. So we've not learned relevant costs, but I can tell you, of course, these are two different methods. So the costs are not the same. So this is false. Implementation of ABC is likely to be costly when variable production costs are a low proportion of total production costs.
Oh,
Okay, so let me break down the statement. If variable production costs are a low proportion, what will be in high proportion?
fixed.
Fixed variable.
Fixed costs.
When there is more fixed overheads to deal with, is my implementation cost effective or is it costly?
Costly.
Costly.
I think it will be cost effective, guys, because again, you are essentially, what do you say? How do I put it? More fixed costs for you to deal with is where ABC is valuable, correct? If there were simply all variable costs, then we don't even need to implement ABC.
Yes.
Right?
Yes.
So it will in fact be cost effective if the variable costs are low, not costly. Okay. So one is true. And again, let me explain one. In a system of ABC, if the costs are varying, then like we had seen in the graph also, if I shut the textbook, but as we had discussed in the graph also, one of the measures can always be your labor hours. So it's not that ABC does not use labor hours. ABC also uses your labor hours. A moment. Chapter 11. Okay. So direct labor hours is also a part of ABC, not just only absorption costing. Okay. Any confusion?
No.
Okay, let's do a few more. Fairly similar. All right. ABC is superior to absorption costing when these two apply. Cost drivers are not easily identified. Will ABC be superior than this case?
No.
No.
No, sir.
Absorption costing.
Because you'll end up using labor hours only, so it will not help. Labor costs form a small part of the total cost.
Yes. Yes.
Again, same logic. If labor is a small part, then the greater part is your overheads, which is where ABC helps. Overheads may change with changing activity.
Yes.
Yes, sir.
Yes.
Yes, fairly obvious. That's where activity-based costing helps. Overheads are difficult to predict.
No.
No, right? But if you don't have overheads, where will you even do ABC? Right? Ajay, can you all tell me an industry where this is the case? Any business where it's you don't know only what your overheads are. Any
Mining.
close, like I would say something like say construction or interior design or something like that, where usually after the work is done, you figure out how much of your man hours of your employees went in that, and then you can do everything. Tab tak you don't know. Sometimes you start and work goes on and on. sometimes it gets done very soon. Correct? So there are industries where overheads are also difficult to predict. Yeah. All right, let's do a few practical ones as well. Okay, let's do this also. It's an example of a cost driver. So SGT is a large manufacturing business that is introducing ABC. SGT components via its own logistics operation to its manufacturing center in Mumbai from a wide variety of locations. It is trying to identify a cost driver for the cost pool called material handling. So material handling के लिए what cost driver from the four would you all recommend? Anyone? Any guesses? So let me clarify one thing. I'm not sure if we've discussed this, but an average will never be a cost driver. If you all have noticed, cost drivers are always total number of units, total number of setups, totals. It can never be an
Material
average.
distance traveled,
The first one.
option A.
Right? It was between 1 and 4. Average will never be your answer. In this case, material distance, a composite cost unit is what you must have ever come across, is what is fair. Because material across locations, so that both the distance it travels and how much material travels within the within the what do you say, ships would ideally be your answer. All right. Okay. I'll read the question. You all attempt the question. A company which makes two products, Saka and Baka, uses ABC. It has recently identified a new cost pool for inspection costs and has decided that the cost driver is the number of so they've told you the pool under driver. Inspection costs are 250,000. Products, machine hours, units per batch, inspections per batch. So it's very similar probably to the cake example that we had taken. What you all need to do is use the cost driver number of inspections and find out only for Saka. No need to do for both. Try and find out only for Saka. So whatever ratio is there for Saka is what you all need. I'll also do it. Or try and allocate the cost to Saka and then try and find a cost per unit. Check once again. Arshida, that seems correct. Bhavika, that seems correct. Tisha, check again. Rupinder, that's correct. take another minute, try solving it, then I'll also do it. Nakshatra, that's correct. Ranjit, I'll just inform the team. Umang, that's fine, correct. Sanjana, that's correct. And I'll also solve it just a moment. So if anyone's stuck, let's solve one. So if I have two products, Saka and Baka, and I need to allocate my inspection cost, of course, I need to find out total number of inspections. Number of inspections is my cost driver. So in this case, inspections per batch is given to me, 4 and 1. So I do need to find out number of batches then. So if the total production is 2500, units per batch is 500, number of batches is nothing but 2500 divided by 500, which is 5, and inspections per batch is 4. So it comes to 20. Again, let me write it. Number of batches. So 2500 divided by 500 and 8000 divided by 1000. So my number of batches are 5 and 8, and that then gives me number of inspections as 5 into 4 inspections per batch and 8 into 1 inspection per batch. So my ratio is 20:8. So 1,20,000, it's 2,50,000 multiplied by 20 by 28. That's my cost. I can do it for Baka, but I don't need to do it because my question asked me for product Saka. And this becomes my cost allocation. I would ideally total it. There's only one, so no need to total. Units are 2500. So OAR would come to 71.43. Everyone clear? Nitya, aligned? Got something wrong?
Yes, a number of that inspection I said.
That's why it's usually helpful to write what this OAR was supposed to give you, which is nothing but the denominator. So if you're dividing by units, it will give you per units. If you're dividing by something else, it's also that. So your question will not match. Right? So always have the habit of writing. That will tend to obviously, help out. All right. So let's do one more question, then we'll take a break. Hopefully, you'll also see the number of theory questions that show up. All right. This is traditional Business product. This one's asking you using absorption costing, something you all can practice later on. Yeah. All right, so let's do one last question. This one. Sorry, maybe a little. Yeah. So again, you all try it first, then I'll do it. Reading for everyone. The CR7 company manufactures two products A and B. Both are produced in labor-intensive environment and use similar processes. A and B are different by volume. B is a high volume product, A is a low volume product. Direct labor hours are 5, output is given, number of purchase orders are given, number of setups are given. Fixed overheads are 4,20,000 divided in volume related expenses, purchase related expenses, setup related expenses. So you all need to do the same thing, but for three. For purchase, you use purchase, setup, you use setup, volume, you use volume. All right. Try solving the question and then let's do it together.
Sir, what is then this direct labor hours per unit?
Sorry, what about it?
Means why they are given then?
Too
Direct
confused.
labor hours per unit for fixed overheads or what it is?
Fixed overheads are volume related, so you will have to decide what the driver is. It can be labor hours, it can be output. Of course, the data can try and confuse you as well, right? Hariyaran, just let me check. Hariyaran, that seems correct. Kirant, Nakshatra, that's correct. Azil, that's correct. Again, please note, guys, you can technically solve for both products, but only solve for the product that's asked to save you some time. It does make a difference. Sharanya, that's correct. Riddhi, check again. Harshida, that's correct. Rupinder, that's correct. Just a moment. That's correct. So I'll also do it for everyone in case anyone's confused. We have two products, A and B, and we have overheads which are volume related, which are purchasing related, and which are setup related. Now I'll only do it for product A, and I'll try and do it a little bit more shortcutty so that I can reach my answer in the exam time. So $100,000 split by 1200 units, which is A, divided by the total of 13,200. Same way, purchasing is 1,45,000 by 75 into 160 and 1,75,000 into 40 by 100. Correct? So my total cost allocated to A is 147,059, and again number of units is given to me as 1200. So my cost per unit, simply divide the same, comes to 122.55.
Sir, what about fixed overhead costs?
Fixed overhead costs are 4,20,000 broken down into these three. So these
Achha,
three
okay.
should add up to 420.
This is the breakup of fixed overheads only.
Correct. And so yeah, to answer that one pending question, direct labor hours will be given because, so again, depending on the questions, sometimes they'll clarify the, what do you say, what the cost driver is, but make it difficult to find that cost driver, such as what we did previously, where you try and find out the batches and all yourself. Sometimes they'll tell you the cost, sometimes they won't tell you the cost driver, but expect you to find that out. So your volume related would mean, of course, volume. If it was hours, then it would be hour related, all right, or labor hour related. So that much of this thing you would have to figure. Some part of complexity, of course, they will leave it up to you. Here, in a unique scenario, even if you would have multiplied this, your answer would have come correct because labor hours are equal. So both of these would have been multiplied by 5, net answer would have been same. But technically that would be wrong. Okay. So that is activity-based costing in a nutshell. Right, more theory, more practical questions for you all to practice. Remember, these 4 chapters, target costing, and the 4 that we are going to be covering this week are primarily MCQ based chapters. Of course, today end of day, tomorrow end of day, we'll also try and do a few section B questions, but that's also essentially MCQs. And tomorrow also, we'll discuss all that later. So, any questions with ABC, guys? Before we take a break, I want to just confirm, everyone clear with ABC? Can I get a yes or no, please?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
But I had a doubt in the last question.
Bolo.
So I didn't get the factor you used for the volume.
Volume, I just use 1200 by total volume, 13,200.
Okay. Thank you.
Yeah. Okay. So yeah, that's ABC. Let's take a break. Let's take a 15-minute break and then we'll do life cycle. It's an even simpler topic. So we'll finish that aram se, and that's the agenda for the day. So let's resume by 4:20, guys.
Okay.
All right.
Okay, sir.
All right. I hope everyone's back, guys. And back, shall we resume?
Yes, sir.
Set up until then. Okay, and is my screen visible?
Yes, sir.
Yes.
All right. So before we start with life cycle costing, as I promised, I'll also just quickly show you all what ACCA resources do we have that we can make use of. So I've borrowed our colleague's account, and because my account as a teacher, as a member, has now stopped giving me access to study resources. So two things that I mentioned last time, and some of you all I think were unable to access the study hub. So two things that you all need to remember or access. Everything can be accessed from your My ACCA account. When you go to My ACCA, you can go to My Qualification, and here only you'll have where it go. Here only you have your CBE practice platform and you are your ACCA study hub. These are two platforms, and over and above at the very bottom there is a study resources link. These are three links that you will ever need in your ACCA prep. I'll just show you all these. One is very important because you'll also need to know, some of you are giving your very first exam. So you'll also need to know how the exam looks like. All right. So very first is your ACCA study hub. Now in your study hub, you'll have all your papers. If you can't find PM, then you can go to not yet started and find PM here and simply allocate PM to yourself. All right. So PM, or how I allocated it. Yeah. Okay. So PM is shows I'm already enrolled. You can just click on study, and that's how you get access to PM. Now this is a new addition. Like when I was a student, this was never there. What they have done is ACC has provided notes, a little bit of practice, a few MCQs for the full curriculum. Maybe the chapter names, maybe the order of chapters, not everything will match. But looking at the curriculum, you all will be able to basically work out what is where. Like cost and management accounting, mein, you see there's traditional and ABC. And then advances, may you see there's target, life cycle, all the other things that we are covering. So say for example, since we have already done target costing, there's all the stuff that you need to know. And within that only, of course, there's eventual MCQs that you can solve in, I think, quizzes. Yeah. All right. So simply study up, and it's the reason why we at Zell at least ask you to cover the study up is because ACCA prefers this. Like odds are that what you read here, what you cover here is something that you'll anyway know. But the tendency is ACCA always puts some unique questions here, which along the similar lines they test in the exam. So it's always beneficial to cover any official resource, whatever is provided. And ACCA is taking a step to providing more and more resources. So of course it's beneficial to go through that. So here it's just study notes and quizzes for you all to go through, which you all can, solve. More important is the CBE practice platform. This is where all your past papers are. This is where ACCA provides you specimen exams, mock exams, and even a blank workspace if you want to practice section C questions. So when you log in, this is how it will look. All you need to do is go to PM. There's a blank workspace, which is basically an empty space. And there's an official resource where you can see past exam questions. You can see some practice exams, and you can see a specimen exam, 3 mock exams, simply put. So all you need to do is you need to assign it to yourself. Once you assign it, it will show on the left-hand side under assigned material. So as you see, it just updated. I can start it. Now this point onwards is what you will see on your live exam day. When you go to a computer-based exam or a remote exam at home, this is what you will see, exactly the same. So once you go through it yourself, you'll be comfortable with it. You'll also learn how to use it. You can read all these rules and all that they give you. And then at this point on is when your timer will begin. The 3-hour exam begins here. So then it's a very simple interface that they've given you. There's a navigator across all the questions, and yeah. So this, for example, is a section A question, your MCQs. In fact, it's ABC, we can solve it right now. And a lot of things that they give you. They give you a scratch pad. They give you a calculator. Calculator can be both scientific or standard. They give you options to highlight stuff if you want. Say, for example, I think I have to click, yeah. So I need to click on highlight, and we'll highlight that. So simple stuff that you should definitely go through once so that you're comfortable navigating it. Say, for example, I want to jump to question 5, I can do that, and so on and so forth. So you'll be able to see how the questions are exactly tested. Of course, you can do this later also, there is no rush, but it's always beneficial for you to do so. This is how section B questions are going to look. You can see the whole case studies on the left, and the next 5 questions are going to have the same case study. Just 5 questions based on it. Again, the interaction is all similar. And finally, you'll need to be acquainted with section C type questions. So here you see it's a question on the left, your question requirement on the right, and you see there's an Excel workspace given to you. Of course, you can do a little bit of playing around and make yourself, get you more space or whatever you want. Also, I think at a P level, though they've done it. Not sure at a no. So at P level, you all can copy tables also, but here you don't need it. And yeah, you all can try a few things here. You all can do some, and these kind of formulas and all will work. Let me show you the formula sheet as well. But this is section C in a nutshell. Yeah, here you can see how the word processor also looks like. And if you look at the bottom left, there's a formula sheet. Here, so there's an exam instructions. Again, what you see at the very start are available here. There's a formula sheet available here, which is all the formulas that are provided to you in the exam. And there's a constructed response question help. Now, this is what I meant the last time. Okay, they tell you all the features that are available. So you can see at the bottom, I guess. Yeah. So they allow you sum, they allow you average, square root, power, count, rounding, logs, NPV, IRR. These are the few formulas that are allowed. So even in your practice, you can limit yourself to these formulas. Shortcuts like Control D, Control R, all these, they have now enabled it, I think. Previously, it was not enabled. I think maybe in this, it will not work. In the exam day, those shortcuts will work. So few things that you need to know, just go through it once at your own time and you'll be pretty acquainted with it. The blank resource is for you to practice. So every question, if you want to do it on this platform, you can keep assigning the blank resource to yourself and practice every question on their interface. That's the simple idea being their approach to preparation. All right. And finally, just a second. So that's the practice platform. We saw the study resource. And then there is study support resources, where you select your paper. Here, basically, every detail about your exam is given to you. Your syllabus is given to you, which is important. Technical articles are given to you. Examiners' reports are given to you. So these kind of things tend to be useful a week or so before the exam. All right. So it's worth reading how examiners look at the papers and the students, what all ACCA thinks is important is all covered under technical articles. So in every sub area, there are articles. And again, it will be nothing new. It'll just be ACCA's way of explaining, for example, absorption costing, activity-based costing, etc. So worth going through a week or two before our exam. Just something that you'll need to be okay. All right. Anyone who's giving their first exam, hopefully you're clear with this before I close the screen.
Yes, sir.
Yes, sir.
All right, perfect.
Yeah.
The quiz. Sorry, Umang.
जो टेस्ट सीरीज आपने दिखाई थी वो कहाँ पे अवेलेबल है?
What is available where?
So the test series which is stored where we can give a full mock test.
That's CB practice platform.
Okay.
All right. So basically, go through this. We have 2 months in our hands. Just go through it, get acquainted with it. That's the only request. Over time, as you'll practice more, probably in the month of November, you all will have a much better idea on the platform. Baki, I personally recommend simply solve on Excel and Word and similar. Don't go through the Excel because it wastes a lot of time. Setting that up, then solving there. It doesn't keep a good store of all your practice. Simply, like we do, maintain a folder, solve all your practice stuff on Excel and Word. Just on Excel and Word, don't use the fancier features. Limit yourself to the basic features. All right. Okay. So now, guys, we're going to discuss one more technique of costing known as life cycle costing. Now, of course, to be able to understand life cycle costing and how it helps, we need to understand the journey of a product's life cycle. So, one that I really like always taking up in class, and again, you all will surely recognize it, is the case study of fog. Of course, most of us must have heard the name, some of us must have used fog. Can anyone tell me what was fog famous for? What was the innovation they brought to the market which made them a household deodorant brand?
Their advertisements.
Advertisements were after the product, like to get the product to scale. But what was the unique part about the product itself, which was, something so innovative?
It's a
Gas.
perfume, not
No
a
gas,
body
only
soap.
liquid.
No
No gas, only
gas.
liquid.
Yes, you.
Perfect. So Fog had that insight of gas-based deos, of course, were the trend in the market, and Fog had that insight that liquid-based deos, of course, in a texture it will match that of a perfume, but it will do the job of a deodorant, and that gap is what they filled in the market, and they were the innovators because there was no like Fog. If you all are aware, by the way, it's owned by a company called as Vinny Cosmetics. It's not even owned by your top 3 4 companies such as Godrej or Hindustan Unilever or ITC. It was owned by a smaller company which worked on that insight and simply exploited that insight. And Fog is, of course, one of India's, I think, the highest selling products in India. And they did a lot of right things in their journey. Now, life cycle of a product simply is split into 5 phases. The very first phase is the product development phase. At this phase, guys, is where a product, one second. Yeah. At this phase is where a product or a company goes under all the activities to find similar gaps in the market. They do R&D, they do prototyping, they work with customers, all the things that we discussed during even target costing. All the things are the things that happen during the development phase. If you see here on the life cycle, they've given us a sales line and they've given us a profit line. So if I'm in my development phase, am I earning any money from product sales, guys?
No, sir.
No,
No.
sir.
No.
But am I still spending money finding out what the market wants?
Yes.
Yes.
Sir.
Yes.
So that's why you can see your profit line going down and essentially you are incurring losses. The idea of the development phase is to get it correct because remember, guys, most of what we do during the product's life cycle often follows the decisions that you make during your development phase. Like Fog could have very easily started a deodorant brand, then from experience learn that oh, people like a liquid brand can be made, and then again go back and then again do everything. But that would have gone as smoothly as what a company can do if they correctly do their research and prototyping at the start. Think about it from a production lens also. Say, for example, I invest in a very good production facility and then I realize my demands are different. I want a different facility. Now it is too late. I can't just scrap a very expensive production facility and build a new one. I have to make do with what I've done. So a lot of the decisions that are made throughout the life cycle of a product are often made at the development point. And there, I simply can't, be very loose about my decisions. I need to do the correct research and then go about with my decision making. The end of the development phase is marked when you essentially sell your very first unit. That's essentially the start of your market development and launch phase, where your product starts marketing. So you start seeing some sales, but right now you're still incurring costs. Can anyone tell me what cost do I incur during a market development phase? Because research and development and all is done. Of course, production will happen.
Marketing.
Advertisement.
Advertisement.
Promotional.
Admin costs.
Marketing.
Advertisements, correct? Initially, every company does educational advertisements, which is getting the consumer aware about why this product is unique. Right now, if you compare to your a lot of products right now, take for example all the say, if you all are aware of ACCO, an insurance product, they are still in the market development phase because they are focusing on advertisements that educate the user of the benefits. These are not the ads where you maintain a brand image or you know do all the ads that Fog actually became famous for. These are ads where you explain to the user why the product is innovative. So of course there's a lot of costs involved even at that point, but naturally of course you're also selling, so you're also able to recover your costs and you're able to start getting into a profit point. The moment you make your profit, you recover all your sunk costs, is where you enter what is called as the growth phase, which is the phase where you start going into net profits. Correct? Before we discuss the growth phase, let's discuss our priorities. If I was in the product development phase, what would be my number one priority, guys? Let's talk financial. Of course, non financial to be discussed. Financially, what's my number one priority?
To get the product at a minimum cost.
Minimum cost, yes. But if I talk about it from a priority perspective, think about it from a life cycle perspective rather. So, development phase, if I go too deep, the journey back up into profits will also be too deep. If I'm to show you visually, if I spend much more money in R&D, of course, the journey back towards profit will also be much more longer, correct? So, of course, a company would want to avoid that as much as possible. Their goal is to always ensure that they minimize the time to market, because the sooner you enter the market, the longer you have your ability to start like to survive the initial phase of losses, because you start having revenue that compensates for your losses. And second, you don't want to incur too deep development costs, because again, if for whatever reason your life cycle is not successful, your product is not successful, then you may not ever be able to break even and you may not be able to run a cycle. Remember, companies, the moment they enter break even, they commission a new cycle. Take, for example, an Apple iPhone. Right now, the iPhone 16 launched, but they are already working and doing their R&D for iPhone 17. But that is only possible with the sooner they break even with their original products. That cycle only forms. But say you never break even. Of course, you can't simply invest in second and third products. So it's very important for companies to minimize the time they enter in the market and they ensure that this trough is not too deep. Correct? In the growth phase, what happens? Growth phase is where people start finding about your product. If your product's good, people recommend your product. That's what happened with Fog, that people recommended it to their friends and family. Try this, it's different, it works. And the word of mouth gets you going. That's where you do more and more brand advertises. So people recall you, people buy you. And this is where your sales and your growth or profit start going up. Eventually, you enter your maturity phase. Any idea why, like Abhibi, I'm going up only. So why is this line drawn here? Any idea why, guys? What's the difference between these two phases?
Growth is actually it is more of like the company still growing. Maturity is where it completely develops and captures basically the market.
Correct. But how do you identify your growth phase has ended and your maturity phase has started?
When people, when the sales start increasing a lot and you start earning a lot of profits, that's one way you can actually understand it. Or the second one is like they don't have to spend much on advertisement because usually people understand that this is a product and they just go for buying that product. Like how they do it for Ferrari. They usually don't advertise their product much. Starting they did, but later on they did not.
That's right. That's absolutely right. But my question still stands. Okay, why can't I draw my line here? It's also still going up. So why is it drawing? Like, what is the? Of course, they've not given it here. But what is the difference? And again, think of yourself in a market. In a market, are you the only player selling this?
No.
No, sir.
Eventually, your competitors will come in.
Yes, sir.
Competitors. What does your strategy evolve into? Protecting your market share. So then you start to over why your product's superior over other products. And this is where most your companies are. Your McDonald's keep always taking digs on your Burger Kings. Your Zomatos will keep trying outdoing your Swiggies. Your Olas will keep outdoing your Ubers. Maturity phase is where the market has evolved, it's mature. Essentially, you understood the top. Everyone who could have bought the product will buy the product. Everyone who is stuck to a service is now sticking to the service. Most of us have a preference about the UPI app we use, about the ordering app we use. So that is where the product is in a maturity phase when there are competitors and market has matured. Correct? In the maturity phase, naturally, you try and expose most of the profits that are possible. And essentially, of course, eventually the product comes to an end because a better competitor eventually outdoes it. For example, Fog's innovation was liquid DOs. Now, for example, in the market, there are roll-on DOs and all these things. Now, they must be in the development phase. If they pan off, then Fog has to react to it. If not, then Fog may go down and another one may come up. We don't know, right? But there are always newer innovations coming. And that's where the companies, the giants that we know, they are known for killing themselves. Like an Apple will never wait for innovation to come from a competitor. They will only kill their product in their own due time so that they can bring a new product in the market, and that is what drives the company forward. So the decline phase is naturally marked with the moment your sales start dropping, and that's where you're declining. Now, an ideal company wants to have its own product decline by a new product of theirs. For example, a small side fun fact, Apple iPhones sales year on year have been dropping for more than 5 years now. People are simply not buying as many iPhones, and the company also knows that. So Apple's product is now well past in its maturity phase. All they are doing with their new iPhones, of course, is ensuring that the market keeps expanding. So while you're in the maturity phase, your number one priority is to maximize the time in market, which is extend the life cycle as much as possible. Which is, again, you can think about discounts, you can think about incremental features, you can think about finding alternative uses for the same product, all these kind of things that companies do to stay relevant in the market and not go into a decline. And please remember, guys, life cycle is not in years, months, days. Different products have different life cycles. For example, a movie production is very long, but it comes out 1 month max, it stays and it goes out. Then you think about books. They have a very similar life cycle to movies, but again, they have a smaller decline phase. Like at the end, it finds its audience and keeps selling certain number of units. Correct? Then there's Apple iPhone. Then there's products like these. Think about medicines. Again, they have a lot of development going. So different products have different lengths of life cycle, but broadly, they all look at such a graph. Correct? So this is your life cycle in a nutshell. Any questions before we proceed? All right. So if I ask you a question then, at which phase am I making the most money?
Growth phase.
Growth stage.
Growth phase.
Maturity.
Maturity.
Growth
Both, I can say. It's okay. Both. I'm making money is the difference. So I'm making the most money during my growth or maturity phase. When am I spending the most money?
Development.
Development.
Development phase.
Launch and development phase.
Product development.
Correct. This is a mismatch that simply life cycle costing solves for. Initially, when we are entering the market, we do not have an idea of the potential scale that our product can reach. We don't have an idea of what are the profit margins that we may be able to enjoy. But the only thing we have a clarity on is what are we currently spending, what do we expect to spend in marketing, and what can possibly happen. Correct? This simple mismatch is what life cycle costing tries and solves for. Because life cycle costing says that you can make incorrect pricing decisions if you base them at a period where you're spending a lot of money. Take, for example, medicines. You incur a lot of money when you are developing the medicine. But the moment your medicine is out in the market, your rival companies can buy that medicine, reverse engineer, and bring that medicine to the market as well. So think about it. You have spent, for example, $200 million. They will do the same thing in $20 million. Now they will launch the product at a much lower price and they will start taking your market away. Now you will not be able to recover your 200 million and it will become a very messy state. Correct? So what companies tend to do is they do not base their decisions on when they are spending the money, but they try and base their decisions of costing throughout the life cycle of the product and then see, okay, what's your average cost? And then they come up with an average price, which means maybe, say, for example, in the early years, where my cost per unit comes to 30, maybe my selling price will still be 20 and I will make losses of 10. Whereas in later years, what I will do is, of course, my selling price remains similar, but my costs, of course, start going so far down that I start making much more money, and net, I end up recovering all my money and, of course, making my desired profits. But what should that selling price be that stays roughly consistent across a product's life cycle is only possible when you try and find out the life cycle cost of a, correct? Let's check the textbook as well. All right. So before we do a few questions, here, this is fairly important for us to understand and agree a lot of things that we've already discussed. That when I'm looking at designing my product, I need to ensure that I minimize the design cost. Like I said, I don't want to go too deep into a loss pit that I am never able to recover from that. All right. And of course, yeah, a few points that they mentioned here, that it's not only the product features as well, it's everything in my production. It's my factory, it's my processes, it's my people. The better I do it, the better my outcome will be. Like if I put a lot of thought to how it will also be made, I'll be able to make it much more simpler. And more simple processes will mean lesser people, lesser time, lesser whatever, essentially lesser costs. So all the thinking needs to happen in this period and careful cost investments need to happen. Then, of course, I need to minimize the time to market because the sooner I enter the market, the longer the window I have before a competitor also enters the market. Say, for example, the moment my product's ready, I launch, I have a good 6, 9, 12-month window before my competitors can launch similar products. But if I delay and my competitors find out I'm working on such a product, they'll also start working on it. And basically, we'll all end up launching the products at similar times, which will book cut everyone's market. So I want to minimize the time to market. So I start making money sooner and I start taking a head start. Then I want to minimize the break-even point. Sooner I break even, sooner I can start new product cycles and be the one who kills my own product rather than waiting for a competitor to kill my product, right? And finally, I want to maximize the length of my life cycle. Like activities such as OTT platforms coming have made the life cycles of movies even longer. Best example is Amazon Prime. Amazon Prime produces movies, then those movies come in the theaters, then it comes on Amazon Prime first for you to rent and then for you to access through your subscription. So they have tried to monetize every part of the life cycle and also extended the life cycle in that very way, right? So the more the maximize your life cycle is, the better it is for you so that you can keep driving revenue out of all the investment efforts that you have done, correct? Conceptually, are we clear with life cycle, guys?
Yes, sir.
Others, a yes or no, please?
Yes.
Yes, sir.
Yes, sir.
Topic wise, so it's a very, very simple. There's absolutely nothing difficult in this that we'll find. So let's try and solve a question together. All right. So in this question, they've given us a lot of details about a particular product. Let's go through that. So they've given us the full life cycle. Development has been finished and the life cycle of 4 years is given to us, where they've given us R&D costs, marketing costs, production costs, and the production volume. They've said the launch price is proving to be a contentious issue. The marketing manager is keen to start with a low price of $8 to gain new buyers and achieve market share. However, the accountant does not support this because he thinks that it won't cover the costs. And he has produced a cost card, something that we are also used to. So, amortized R&D costs, 4 years ki life cycle makes $5 million per year. Marketing costs first year are 5 million. Production costs are 1 million units into $1 each. So total cost is $11 million across 1 million units. So it is $11 per unit. So if we listen to the accountant, it should be $11 plus our profit, and our selling price should be something like $14, $15. But our marketing guy telling us that your price needs to be $8, otherwise people won't buy and your projections may go wrong. So now we are in a dilemma, and this is exactly the dilemma that life cycle costing solves. So what does life cycle costing simply do? It finds an average cost across the life cycle. Formula is very, very simple. It is total costs across life cycle upon total units sold across life cycle. So simply put, you'll have to add all the costs divided by all the units sold, and that is your average cost across life cycle. The idea is that over time, you spend lesser and lesser money. Like marketing costs are reducing because you're scaling, your production cost per unit is reducing. So why not find out an average and reflect the correct market price, taking this into consideration? So if I do this for this particular example, let's do a total costs. So what is my R&D cost total, guys?
20.
$20 million. Let's solve this in dollar million. So $20 million for R&D. What is my marketing cost?
5.
Total life cycle. 5 plus 4 plus 3 plus 0.5. Correct. And similarly, what is my total production cost? Again, we'll have to do a little bit of working. So $1 per unit for 1 million units, then 0.9 for a further 5 million units, then 0.8 for a further 10 million units, and 0.5 for a further 4 million units.
Sir,
Yeah.
There you have put plus 0.9 into 5, 0.8 into 10.
Fair, my bad. Yeah. Perfect.
Yes, sir.
So that comes to my total cost of $48.4 million. Now, total units across life cycle, simply a unit total. So 1 million units, 5 million units, 10 million units, 4 million units. So that's 20 million units that we sell and $48.4 million that we incur. So our life cycle cost, average life cycle cost is nothing but million gets cut, $2.42 per unit. Initially, accounting wise, it will be $11, but sometime later it will be like $1 or something. So why do we wait till that point and tab tak lose out on the market share? Whereas now we have an idea of what the cost is going to be across the life cycle. Of course, there's no denial. There is a lot of assumptions in play. But given if, of course, the team has correctly done their R&D, if eventually our cost is going to be per unit average of 2.4, would you guys be comfortable selling it at $8?
Yes.
So when the life cycle cost of a product is considered, $8 can be a market price that can be considered. That is simply life cycle costing. Very, very simple chapter. Calculations are always going to be this simple. Of course, they'll only give it to you in some sense where you have to add up the costs. And second, you'll have to remember that it's always a grand total of your units as well. Correct? Sometimes you still do the costing, but divided by first year's units, that will be a very heavy cost. So it's total cost divided by total units. Only thing to remember is only to include all the costs once. What do I mean? Sometimes we also take the asset ka purchase cost and also the depreciation cost. That is double counting a cost, correct? Either you take your purchase price or you take the total depreciation. What I can't do is be like R&D is 20 million, so I'll include that. Plus amortization is 5 million into 4 years, so I'll include that. That ends up including 22 times. Okay. So you only have to include all the costs once, which is very logical, but sometimes in a question, they try and confuse you. All right. Sometimes if they give you total depreciation, you will still take it. Don't think of it like it's a notional cost or not a cash cost, because depreciation represents the purchase of a machinery. Correct. So include every single thing once, and that's it. That's what will give you your life cycle cost per unit. Any questions, guys? Is everyone clear with this?
Yes, sir.
Perfect. So that's primarily it. Like I said, it's a short chapter. Two more specific life cycles for us to discuss, and then we'll go through the LMS and practice more questions. All right. So next, I want you all to pay attention to customer life cycle costing. Now, a customer's life cycle with a business, with a brand, with a corporate is slightly different. 1 second. Yes, Digesh. We take either the purchase price or total depreciation because they will add up to be the same thing in theory. Okay. And don't worry, we'll do 2-3 more questions from the LMS. All right. So yeah, customer's life cycle. So think about, for example, any business that you interact with or any product that you try and inquire about or anything absolutely where you interact with another company. Say, for example, you're looking to buy a new house. So you're a customer for someone who's selling a house, correct? Very first thing is the point where they interact with you, which is nothing but the reach stage. The reach stage is where essentially they develop brand awareness. This happens when you see ads on YouTube, when you see ads as hoardings on your nearby areas that a brand new project is in the works and you get aware about it. The difference in this stage is it's one way of communication. The company is communicating to everyone from which eventually potential customers will emerge. Like today, if I see an ad for your phones coming on my YouTube, I maybe not be a customer, but someone else may be. So reach is the phase where you reach out to everyone and you try and filter out who is actually interested in your product. You filter out by making people sign up to forms, give your email address, give your phone number, meet them in person, whatever that is, which is known as the customer acquisition. Now, after a customer is acquired, the communication becomes personalized, where maybe an agent will call you and tell you that, okay, these are the features of our building, this is all that we are doing, this is the location, this is the amenities, whatever. That communication tends to be more personalized. You are specifically being told depending on the company's understanding with you. If you're a bachelor looking to buy your first house, they'll pitch it to you accordingly. If you're a family member, you have 2 children, they'll pitch you features which are more suited to children, how there are other families with children, how there's play areas. So that tends to be more personalized to you so that the business can acquire you as a customer. But every business and the nature of business understands that a sale is not a transactional relationship, nor is it a one off relationship. So, if you want to purchase a home, will you just check the property and immediately be like it's a purchase that you're making? No. You will take your due time. In that due time, the company needs to ensure that they nurture their relation with you. They keep in contact with you, not harass you, nor do they let you get to a point where you forget as a customer, ki yaar, what was that building I had checked out? I can't recall the name. So they need to get the balance right so that they can keep in contact with you till you're ready to make a purchase decision, or in the case of other products, a repeat purchase decision. Of course, something like a home, something like a car is a one off. But take, for example, all the consumer goods that you buy. Sometimes you buy, services like maybe you buy t-shirts from something like a snitch. So again, you will have to keep visiting them every 3-4 months. Now they want you to remember them so that when you do make a purchase decision, you will end up remembering them. So all the ads, all the campaigns that you all see companies do is usually in this nurturing space. Like for example, Coca-Cola, a lot of times we think, "Hey, why are they even advertising? Everyone knows about Coca-Cola." They are not advertising to your ability to understand what Coca-Cola is. They are advertising in your ability that next time when you're ordering, you will prefer Coke because subconsciously it's already playing a role in your head. So all these things are nurturing that they do so that you are incentivized to buy. Finally, retention phase. Retention is where they've acquired you as a customer, so you keep going to them, and they are, depending on what you do, they try and figure out what went wrong with other customers so that they can fix their customer life cycle and get you into the system as well. Finally, there is an advocacy phase, which is nothing where your customer becomes your advocate. Subconsciously, all of us have preferences over product, and we end up being advocates for the company. Okay, yeah, you should definitely try this website, you should definitely try this product, it will give you the returns it's giving me. And we start recommending the brand, which is the ultimate form of success for a product because it's free, $0 worth of marketing, which brings the company more and more customers. So the goal of every company is to turn you into an advocate of that so that you refer more people to your company and the cycle keeps going on and on and on. So that's the customer life cycle journey in a nutshell. Any confusion between life cycle stages? Are you able to correctly differentiate between all 5 stages?
Yes.
Others?
Yes.
Yes, sir.
Yes.
Right. So that's your customer life cycle. And next, you also need to understand the life cycle of a service industry. As we had discussed on our first lecture, world is moving towards more and more of a service-based economy. And it's only fair if you understand components of service-based industries and how their life cycle slightly differs. Correct? And the best example of a service-based industry to take is, for example, Amazon. Because, of course, every single component doesn't exist for every single company, but a service-based company as big as Amazon has all these components in play. So this talks about the life cycle of the service, not the customer, not the product, the very service which facilitates the business. Correct? So first and foremost, the part of the service will be the workforce, undeniably, which is all the workforce and connected in the whole business. So for example, with Amazon, talk about their warehouse employees, talk about their delivery agents. All these employees are crucial to the delivery of the service. So they need to be managed so that the life cycle of a service completes. This part of the workforce, this part of the service is completely in the control of a business, because only when you place a purchase request is when all these activities are executed. But What is not in their control is reverse logistics. What are reverse logistics? Reverse logistics start when the customer places a return request. So when the control activity goes out of control, what is the hope of Amazon? That they sell you something and you don't return it. Correct? So tab tak they can optimize everything because they know this is the bare minimum that's going to happen in every delivery. We have to deliver it. But some customers will return the product, some will not, some will find a replacement request. It will be size related, it will be something else. So reverse logistics is not something that a company can control, which is a challenge in itself. Okay? If you don't know where a request will come from, what will be the request be, why will it be there, do we have to return money, do we have to replace goods? So that becomes a completely different sector that they have to manage. Correct? Then there is enterprise asset management. Enterprise asset management is again the assets that your service partners use. So this can be delivery trucks, this can be simply bags, t-shirts, everything. Now, I'll give you a quick example of how this became an issue in India. So, do you all remember the phase where Swiggy and Zomato they stopped accepting cash? Like when you try and give them cash, the delivery agents would come and tell you, okay, sir, please GPay it. We are not able to handle the cash. That was a move done by Swiggy and Zomato because the agents they were collecting a lot of cash and they were simply running away, discontinuing their accounts. So the enterprise asset, that is the cash, which is in the hands of an agent, was simply being compromised and the companies were not able to manage it. So what did they do in their response? They blocked the agents above 5,000 rupees. So if an agent collects 5,000, he will get no more orders until he deposits that 5,000. And naturally, an agent can't keep depositing money throughout the day. So their revenue income got blocked. And then they started telling you, okay, sir, please do GPay. So that eventually, as customers, people started settling for that idea that cash is not going to be accepted. So enterprise assets involve everything that is in the hands of your service partner, right from cash to physical assets that you have provided. Think about salon services and all. Think about home to home services like Urban Company does. They give you full kits to facilitate service, whatever it can be. So all those fall under enterprise asset management. Then we have contract management. Contract management talks about all the third party contracts that you have. Like an Amazon does not do all of its deliveries by themselves. They have partnered with FedExes and UPS and all these different partners to do certain deliveries for them. They have partnered with different companies to manage their warehouses and much more. So all the things that they have contracts with fall under contract management because you as a service provider are working with several third parties. You need strong contracts with them because at the end it's your brand name. A customer does not care that who delivered late or who messed up your product. A customer will care that Amazon's product was not good. So you need watertight contracts, which in business are known as SLA, Service Level Agreement, which simply focuses on each and every aspect what is expected of a customer, of a partner in a third party arrangement. Correct? Finally, there is knowledge management. Knowledge is nothing but the insights that you learn. Insights about the customer, insights about the locations that maybe you need to take this delivery route or do this, do that. All the knowledge that you gain and you make it easily available to others so that they can keep building on top of it and not making the same mistakes. So companies try and store all this knowledge, and of course, it's knowledge, it's not easily stored. So that's why they need to correctly manage it and they need to correctly make it accessible. Like your companies like Google and all have knowledge hubs, which you simply can access through their platforms. So if I Google Help, they will open a full page where all the FAQs are already answered. So if I'm say maybe stuck with one of my Google services, I can read that and I can get a resolution. So their knowledge management even extends to their customers. Correct? And finally, there is your call center management. This is the part that starts when again the service or the customer needs to interact with the service if any of these things have been problematic. If you're having issues with the person, if you're having issues with returns, whatever assets, whatever this thing, essentially a call center is who you connect with and you get your required help. What is the nature of the help? Completely depends customer to customer, which again becomes a part that the company then needs to handle. Fair enough, guys. Any questions? Able to clearly tell apart between all the terms? All right. So it's mainly theory. So nothing too deep. I can go into it beyond that. But theory perspective, may only this will show up. Sometimes they ask you questions like they give you an example of an activity a company is doing, and you'll have to tell them which part of the life cycle is it in. Similarly, here. So that's why you need to just be able to clearly tell what each of these terms mean, and that's primarily enough in a life cycle perspective. So shall we jump into some questions then?
Yes, sir.
All right, so I'm done speaking for the day. So now questions are gonna be on y'all. So we'll do a few section A questions and then we'll do a section B question on life cycle costing as well. All right. So 11 questions, let's try and do 4 or 5. So in calculating the life cycle costs of a product, which of the above items should be included? Should we include testing costs? Anyone?
Yes, because in product development phase, we need to test the product.
Sir,
Correct.
this cost is a part of R&D, so it will be included.
Perfect. Should we include production costs?
Yes.
Yes.
Should we include delivery and customer helpline cost?
A part of life cycle.
Yes, sir.
Yes. Legit cost, all real costs need to be included, simply put. Should we include planning and development costs?
Again, sir,
Yes,
R&D cost.
Yes, sir. R&D.
It's the initial stage.
So some call it R&D, some call it planning and development, same thing, essentially your research phase. So all costs need to be included.
Sir,
Yeah, Grant?
sir, why did we include delivery cost?
It's a cost now. As long as it's a real cost, you include it.
Okay, sir.
All right. In which of the following ways might profits be improved over a life cycle? By minimizing the time to market a new product. Does that help me in making more money?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. Maximizing the break-even time of a product.
No.
No.
What should it rather be?
Minimizing.
Minimum.
Minimize. I want to reach as soon as possible to my break-even point. So that's false. And third is minimizing the length of the life cycle.
No, sir. Maximize.
No, again, it should be maximize. So life cycle costing, fairly easy topic. All right. So again, you all can only do the question. I can then do it for all of us. I'll read it. You all can start solving it as well. Sitco Manufacturing Company produces a range of products and they have a new product called Ranger. This relates to all the information for that product. There's design cost, manufacturing cost per unit, depreciation, decommissioning, machine hours are there, 4 hours per unit, and the budgeted volume, what they expect to produce throughout the life cycle. The company's fixed overheads are 72 million, machine hours are 96 million. So you all will have to do absorption costing, find OAR, and include that OAR in your life cycle cost also. All right. So mixture of both of these things. Try solving the question and then we'll discuss it. I'll just be back in a second. I'll refill my water. You all can solve it. You can send me your answers in Zoom chat. Zell, check again. Maybe you've excluded a cost. Nakshatra, that's correct. Isha, that's correct. Remember simply to include all costs and find a life cycle cost. Sanjana, that's correct. You round to your closest answer. Also, only Junaid's my friend who has his video on. Everyone else has turned their videos off. Junaid, Meera, only these two are there. Meera, Vijay just try again. I'll wait for another minute. We'll also solve it together. Arun, Ezil, check again. So I guess we're having some difficulties. Let's solve this. Karthik, that's correct. So just a moment. So I'll solve it. You all can also ask your doubts in case you assumed anything else. All right. So same exact thing. Total cost and total units. Now total units are already given to me in the question as 300,000. Total cost is simply an addition of all my costs. So there's one thing given in per unit terms. So I'll do that first, which means I'll have to find out my OAR first. So my overhead absorption rate per machine hour is nothing but 72 million is my cost, 96 million is my hours available. So my overhead absorption rate per machine hour is 0.75. How many hours does my product use? 4 such hours. So it is 0.75 into 4. So my overhead absorption rate is 3. My cost of production, like what is it called? Manufacturing cost, direct materials, that's right, is 20. So my cost is 23, right? So rest is very simple. 800,000 is my designing cost. 500,000 is my depreciation cost. 20,000 is my decommissioning cost. And my production cost is 23 into 300,000 units. All of that done in one line. My cost comes to 8.22 million. So my life cycle cost, which is my answer, comes to 27.4. So if you all got different answers because of different assumptions, feel free to ask me if there's any confusion. Everyone clear? Those who got different answers, any assumptions you all made, anything you all want to discuss?
Sir, I just have one small doubt I wanted to know about. The total number of machine hours are 96 million hours. But
Correct.
if we go through the budgeted volume, it will be 1.2 million hours of
Mhm.
production. So like, how does this work in the total fixed production overhead?
Right. No, but this is one product in their factory. Na? They have a range of products. So this one will take some hours out of the total in the factory.
Okay, and it is just like equal divided among all the regarding their like machine hours.
Correct. So this was
And
absorption costing of one product. There will be others and they will also take the remaining cost.
but like sir, like I just have one small thing also to ask. That is, if it was mentioned that this was the sole product the company makes, like range is the only product the company makes. So in that case, with which of these we have gone? With the 96 million hours or the one?
If this was the sole product, you would simply add a full 72 million in your total cost.
Okay. So
Barabar,
then
no? Because that's the
all
only
that would
cost.
have been divided by the 1.2 million hours required for the production of 3 lakh units. Okay, sir.
Correct.
Thank you.
Yeah, perfect. Any other doubts, guys? We are finishing before time because you all are not asking doubts. Huh? So, bindas ask, we have time. Because I don't think I cover it well enough to not have any doubts. So, if there's any confusion, feel free to ask me.
Can you explain the total cost of it?
Total cost?
Yes, sir.
So that's just an addition of all your costs. 800,000 designing, 500,000 depreciation, 20,000 decommissioning, and $20 plus $3 of OAR. So $23 into 300,000 units. All right. And can someone explain why we included depreciation then?
To get to the point of purchase price.
Our depreciation across the life cycle is nothing but your purchase price, correct? Even though it's written depreciation, we should include it. All right. Okay, let's practice one more.
Sir, like after we are done with the question, I wanted to ask you one more thing regarding the target cost. I was
Mhm.
solving questions from BPP kit, and there were two questions, which like I had a kind of doubt in them. So
Okay.
can we do that now, or should we just leave it for the doubt session?
No, you can just send me on WhatsApp, no? So I can solve it. Don't wait
Okay.
on your doubt. It's better when you get the doubt
Okay.
only you send it and I can sort that rather than you waiting week to week.
Okay, sir, I will do that. Thank you.
So you can send the doubts on your common group. You can send some to me. I either way, both places I'll answer. Okay. All right. Okay. Same thing, guys. You all can try solving the question. It's essentially a practice of correctly adding up your costs and correctly coming to the answer. Such questions, you can also group your variable and fixed costs so you all don't end up duplicating your calculations. Vansh seems correct. Nakshatra correct. Bhavika, that's correct. Umang, that's correct. Disha, that's correct. Hazel, that's correct. So this one I won't really solve, guys. It's just an addition one. In case anyone's having any issues, feel free to ask. We wait for a minute or so till everyone's done solving. See, as I was just mentioning, I would solve it just by adding up my variable costs at least, so that I don't have to do the whole thing twice, and add up all your fixed costs as if it's just numbers. So when you do that, your answer should come to 3.22, which is the answer everyone's given me on chat. And is anyone having any issues? All right, perfect.
Sir, can you explain this?
What part of this is it? So what you need to do is all the costs we need to add up. So all your fixed costs will simply be added. All these costs will simply be added together, and your variable costs are given in per unit. So you simply add your variable cost. This becomes 2.8 multiplied by 2000. This becomes 2.2 multiplied by 5000. And this becomes 1.6 multiplied by 7000. Add up all these values and you have a total life cycle cost divided by the total units, 14,000 units, and your answer comes to 3.22. You can see it here also if you want to tally.
Oh.
Yeah. All right, let's do a section B question as well, so we start getting the hang of that. So section B, mein guys, full cost volume. So the 5 chapters, target costing, and the 4 chapters that we're going to do this week are all already covered. But also, you will, what do you say, find some MCQs here and there from your. Okay, wait, I opened. Yeah. You will also find some MCQs here and there from future chapters that you're going to learn. For them, don't worry. There's always more questions that or more coverage that we're going to do. All right. So I think chapter. Yes. All right. So let's tackle question number 4. As you will see in section B, there will always be some background info and there'll be 5 sub questions following it. All right. So let's tackle the questions one by one. So Ramnath Company is an electronics business operating with an advanced manufacturing technology environment, producing fitness watches, weighing scales, and other electronic items. It uses life cycle costing. So Ramnath Company is about to launch a new electronic gadget called the Robin for measuring health statistics in patients who are unwell. It intends to sell the gadget to hospitals. So across 2 years, they have expected X number of units sold, cost per unit, labor cost per unit. This is in decimals, it's not $1,200. The fixed overheads are given to you, and selling and distribution costs are given to you. So again, if you all can calculate the life cycle cost for per unit of Robin, even simpler, I guess, 2 years ka data. Again, try and just add up the unit cost so it's simpler for you to do it. Vansh Granth, that's correct. Isha, that's correct. Junaid, that's correct. So again, if anyone wants me to solve, feel free to ask. There's no problem. Bhavika, that's correct. So do we include selling and distribution cost, guys?
Yes, sir.
Yeah. All costs are included, nothing else. So Umang Arya, that's also correct. So answer I hope comes to 24.54. In this one, we'll be able to check it all together at the end. So which of the following costs would be included in the life cycle cost of the scales? Concept design cost, should I include them?
Yes.
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 Yes, sir.
Yes, sir.
Testing cost,
Yes,
Yes.
sir.
Yes, sir.
production cost, yes.
Yes.
Yes, sir.
Yes, sir.
Yes, sir.
Yes.
This very rarely has something that you don't include unless it specifies that a duplicate is there, right? Very rare. All right. Which two of the following statements about life cycle costing for the Robin are true? Life cycle costing aims to ensure that a profit is generated over the entire life of Robin. True or false?
False.
False.
Why false?
Sir, true.
Because starting to stage is not profit. No.
Entire life.
Generated over the entire life, yes. Not throughout the life, over the life. Okay, we'll come back. Life cycle costing focuses on short term by identifying costs at the beginning of the life cycle.
False.
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 False. Even the costs at the very end. Life cycle costing is known as a cradle to grave method, start to end. So, not only start, end also. Life cycle costing writes off costs to each stage of the life cycle.
False.
You average it across all cycles. Life cycle costing ensures that the price set for Robin is based on better knowledge of costs.
True.
True. So yeah, revisiting again, one is true because the whole idea of life cycle costing is that maybe per unit, as the example that I gave you all at the start, maybe per unit you won't make a profit, but across the life cycle, when you net it all off, you will have a profit being generated. All right, the idea is that. So it aims to ensure that a profit is generated over the entire life. Throughout the life, not necessarily. But when you end and see it, net, it should be profit. Okay. All right. Are the following statements true or false? Ramnath company uses an expensive costing system. True or false? So I guess you'll may be confused here, but blanket answer is true. All these systems that you talk about, which involves data collection, you need a lot of data, you need a lot of research, you need a lot of accurate forecasts to be made. That makes the whole process a fairly expensive one. Okay, so generally these methods are expensive to implement. Okay, Ramnath company's costing system is quicker to use than traditional absorption cost. Absorption is actually much more quicker. Life again takes a lot of data, takes a lot of workings. So it's not generally okay. When would the bulk of Ramnath company's products life cycle costs be determined? As in, when will you have an idea of what the costs are going to be? At what stage?
Developments.
Growth.
Growth.
stage.
Development, growth, which one?
Growth.
The growth.
Why growth?
Economy of scale. Economy of scale.
Among voice is thoda cracking. Can you say it clearly?
Because at this stage we produce on economies of scale due to high product.
No, the
high
question
demand.
is, when are the costs determined? When do you get an idea of what the full costs are going to be?
Okay. That then it is development step.
It should be in the development stage. Otherwise, life cycle won't be possible only without knowing all the costs. So once you know all the costs, once you determine all the costs at the start, is when you do life cycle costing. All right.
Sir, I have this one simple doubt. It would be like
Come again,
company,
Karthik.
sometimes the product may have like harmful consequences on the environment. Okay, like I used to make a pair of shoes and I didn't knew that.
Voice is coming and going. I'm not able to understand the question.
Just a second, sir.
Yeah. Any other doubts until that?
Sir, I have a doubt in the first question.
Yeah.
No, not in the first, then second, sorry. One thing we assumed that it is always included. What was it like? I lost the connection for a while, that's why.
Production costs are always included. What I'm saying is mostly the answer to this is include everything. All real costs are included. So then you write included to everything.
And sir, if by chance any depreciation or allowances comes, then what should we do?
So that's what it needs very specific writing. Say, for example, they say asset purchase and asset depreciation. Then you would say asset purchase will be included, depreciation will not be included. Something like that. But this is something that doesn't get tested only as much because it's very silly. But yeah, unless they are very specifically worded, only then that gets not included. Only to avoid duplicate.
Means the cost actually
Sir,
we
is my voice clear
incur
now?
in cash is included, like the spending and all.
Yes, correct.
Okay, thank you, sir.
Perfect. Yeah, Karthik, go
Is
on.
my voice clear now?
Yeah, yeah.
I wanted to ask, sir, like companies make product and sometimes the product may seem to have some like harmful consequences on the environment or like any other stuff. So, for example, I made a product and I didn't know at the start or the beginning phase of the product that my product is causing harm to the environment.
Correct.
Like a pair of shoes had a special type of rubber which was harmful for the environment. And now I have been penalized for that and I have to pay a hefty amount of fine. So how will that impact the life cycle costing? I wanted to know. Just a silly doubt. So
No,
that
it's
was
not silly.
something.
In fact, it's mentioned. It's probably mentioned. 1 second. Yeah. Oh, where is it? It is definitely mentioned somewhere. 1 second. Choose. Okay, but I remember reading it somewhere. Oh, it's just. But yeah, in theory, again, forget uncertain scenario. We'll come to that. But even a certain scenario, like when I set up a mine, when I set up a factory, of course, at the end, I also need to incur cost to clean it up, or we call it refurbishing the location. Correct. So that cost often happens at the end, and forget all accountability. Companies want to avoid it altogether. It's so far in the future that they don't even look at it at the moment because 15 years, 50 years, 60 years later, it is something very difficult for them to predict. Correct? Life cycle costing as a concept says that you should at least account for a expectation, right? The idea is that. And when you're uncertain, when you cannot expect it, of course, you'll do your accounts and you'll end up doing it. When it comes to surface that this may happen, of course, it's something that you have to account in your future sales then, right? Like companies now have started doing, our product is sustainable, our product is recyclable, and they charge a premium for it. That is essentially, again, something that, okay, they may incur a cost, so they pass it on to the consumer later when they realize, okay, this is a cost that they will incur. Okay, so usually it gets missed to answer your question.
Kind of
Okay, so
decommissioning cost.
like those like unknown scenarios, they are no kind of prediction or anything is included in the at the moment. And when they occur, we just like add them on. Like if I have to pay a fine, I will just add it in the life cycle cost.
Right. So that's what the whole idea of your costs get defined at the start is primarily that when they tell you, okay, you want to ensure that all your costs are well understood. It's this. Okay, can I use a different rubber that avoids a particular cost of using that rubber or burning that rubber or whatever? Correct? So that's what happens at the research stage. Can I avoid future costs, which also includes such costs? All right.
So actually, the question, like I use the example of rubber, but recently I was reading newspaper and an incident came in front of me. A Canadian ticket booking, like the movie ticket booking company, they had this one like a shy charge of $1.2, something around that, in their website. Normally, you would look at the ticket price; it would be around like $5 to $6, and when you check out, they will just add it sneakily in the total price. Now, the Canadian government like announced the verdict, and they had to pay something around $50 million in fine. So I was like curious about like if they are doing life cycle costing for the ticket platform, how would they like manage this fine they have to pay of $50 million? So I was curious about that thing.
So that's what I'm mentioning, right? Okay, they will miss it because something that you're not aware of will get missed. When they do get aware of that, they can still correct their prices and start figuring a way to including that, right? But otherwise, and of course, some companies never recover and they go bankrupt. So the options can, of course, depend on the real scenario. But life cycle के context में, that's something that is missed because you don't have that info only.
Okay, thank you.
Yeah. The idea is get all the info possible at the start only and then try and include everything correctly. But of course, the limitation of an assumption is that you miss out on some things. So that's something that falls on you later. Yeah.
Yes, I got it. Thank you.
All right. Perfect. Any questions with the chapter, guys? Chapter or the question that we solved? We're practically done for the day. Again, we can close slightly sooner. Okay. So yeah, with that, we're done with chapters 1, 2, and 3. Tomorrow we're going to get into throughput. Throughput is something I'm pretty sure most of us have not come across before. So tomorrow we'll start with that fairly interesting chapter. And we'll also discuss environmental accounting, fairly important from ACCA's perspective, more tested from theory. So those two chapters is what we're going to cover tomorrow and be done with the first subset of our portion. All right. Like I said, chapters are small, but a lot of like it's basically one topic wale chapters, but something we need to do in depth. All right. So tomorrow's agenda is chapters 4 and 5, and then we'll proceed.
Okay.
Okay.
Perfect. Any questions before we conclude? Okay. All right. Cool, guys. So let's continue at 2 o'clock tomorrow and pick it up from there. Thank you so much. Bye.
Thank you,
Sir, thank you. Bye.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you so much.
Bye.